Welcome, guys, to episode 3, or I should probably say day 3 of the FTX Market Mastery course. Hope you guys have all been enjoying the first 2 episodes. We've got some awesome content to take you guys through tonight. We're going to be going over a few different technical analysis strategies. We're going to be covering off what you should be doing from the very, very start to the end of your checklist. When you first wake up in the morning and you drag your ass down to the computer, what's the first thing you want to be looking at? We're going to go over that. We're going to be going through what Troy does to identify trade setups and also be aware of what might be coming in the future as well. So you're already ahead of the game and ready for moves and not trying to catch them after they've played out, right? The aim of the game in trading is being ahead of the market, not behind, right? And that's why we need to be aware of, this might happen or that might happen. If this happens, this might play out, and then I want to be getting into a long or into a short, right? So I'm going to teach you how you give you a nice little easy to follow checklist that you can go from start to finish. It should help you guys to start to learn how to pick up your own trades, not just have to rely on me and Troy. And hopefully if you guys find some good trades, you can send them to me and Troy, we can take them too. Right, after that, I'm going to be covering off the move contract, which is basically an options contract, but it's not really, it's a little bit different. But we're going to be going over that and how to trade that and how to work out its intrinsic value, which can give you a pretty good idea in which way you want to be trading that market. And then we're going to go over a whole heap of different tips and tricks, different indicators and things like that that can assist in trading the move contract. So that's pretty much it from me and the intro. I'll handball across to you, Troy.
Cool. I'll share my screen. All right, we're doing a quick market review, correct?
Yeah, we'll do a market overview.
Cool. All right, guys. We were expecting this breakout. If you guys watched the video on Thursday last week, no, Friday, I think it was, and the one on Monday, just been right, impressive breakout. The bears had to concede once we started getting that momentum to the upside. We've gone straight through a major order block, right? That one that I've been covering multiple times on the weekly back here. We'll come straight through this, which I've fine-tuned to the height of this. And we'll just launch straight through that. So that's very bullish, right? As long as we hold above that now, it's very bullish. So this is on weekly candles. Weekly candle has to close above this. It does not mean that we can't go straight back down and then come back up, right? So ideally, we want to close above at least 10,400 on Monday. And if we don't close above that and we are back inside the order block or below it, that'd be very bearish because it'd be like a rejection of the pump. We're unable to hold. So it's going to be really careful. The bigger the wick, the more bearish that would be in a sense. But something just to pay attention to, right? Because when we broke out of this market, it's a strong Marabuzu candle and then continuation, right? That's a very healthy candle here, right? So this is a very healthy candle here, and this is a strong continuation, which is what we were expecting after that Marabuzu candle. But if this does come back down and close under there, which I don't think it will, but if it does, you need to be a little bit concerned. Let's get into the daily time frame. The daily at the moment, a bit of a pullback, but to be expected after a pump like that, right? Any of these pumps, they usually get a bit of a pullback, right? And this is something I just wanted to cover tonight for anyone who's watching at the moment. Is there an audio issue?
No, we're all good for audio. I think a couple of guys might have had a bit of an issue, but I think they're all sorted out now by restarting.
Cool. All right. So something I wanted to cover is we've got a CME gap. Now, we can't put too much weight on it, like I said in the video on Monday, but it does exist, and there's a high probability of them filling, usually within the week that they're created. So what happened was price closed here on a Friday, okay, and then the CME exchange, they close over the weekend, right? So because it's a 24/7 market and BitMEX and FTX and Binance, they don't close, right? They're 24/7 running. Because of that, if something happens over the weekend, and then when CME open again on Monday, there's going to be a gap left in price if price is deviated away from the close price on the Friday. So in this particular case, on Friday and this weekend just been, price jumped a large portion here. Now, you'd be like, why does that matter? Usually that means there's money stuck down here, okay? So the big whale players, the market makers and the rest of it, they've got orders down here, and instead of copying the loss, from my understanding, they bring price back to it to close out their orders, if that makes sense. A really good example of that, I'll just cover that real quickly while we're doing this, because this is an educational series we're doing, is there was back here on the daily, there was a gap left here, okay? So when this COVID sell-off started to occur, we left a couple of gaps on the way. So here's one here, right? And there's that other one green one. So I'll just drag them both to the right, and we can just see how price, right, reacts to it. Probably from there to there-ish. I think from there to there, actually. Right, so when this happened on the COVID dump, there's a lot of money trapped back up here, right? By the time we finally got back up there, we can see that first frost candle, the first real frost candle, topped out exactly where the CME gap was, right? And then same again for the next one. So the market makers, who I assume, this is all assumption, that were pushing this to achieve that, they achieved their goal and price reacted. They achieved their goal and price reacted, right? So with that in mind, we've got a little guy here. It doesn't have to be filled. Doesn't ever have to be filled, but it does exist, right? So what I'm expecting maybe is some kind of throwback like this guy here. I'll get rid of that, which should probably be better seen on this chart. What we saw was a complete dump and then continuation, right? So this part here is actually that gap here, right? So that was filled over it was created over a weekend, and CME had to then close that. Well, they didn't have to, but that's the logic behind it, right? So because it exists, we're going to keep that in mind, and we're going to expect possibly some kind of throwback, which is this dump, to come down and close the gap that may have existed, right? So maybe we come down, and then we just carry on like nothing happened. If that makes sense. We won't go into too much of that, but just keep that in the back of your mind. It exists from about 9665 to 9925, and this is on the CME chart. So their price is actually ahead of ours at the moment by about $100. So also keep that in mind, but not a biggie. We'll go to the 4-hour chart now and just have a look. So we were looking at a potential it's not a fractal, but a candle pattern that could have played out. Looks like it's just lost that happening, unless it ends up as a pin bar, but it looks like it's been rejected here at the moment. Bearish retest and maybe coming down further. Looking at this from a different point of view, what I'm going to do is just use fibs, go from the low of this rally, right? This is where the rally began after the dump to the high of it, right? So it's very, very common for after a rally like this for price to retrace either back into the 382 or into the 618 down here, right? So how these retraces normally look is some kind of flag, and then it continues, or even deeper where it comes back and then comes back down to this one before it continues. That's for a continuation pattern. It doesn't have to happen. Like on this weekend. So the CME closes on the weekend. So that means that anyone who wants to punish them, or if price action gets bullish on a weekend, that's when the gaps are left. But they can be filled at any time during Monday to Friday for the CME chart. Don't put too much weight on it. It just exists, okay? Just keeping in mind we are pulling back. It's not a bad thing. Pullback to the 382 is very healthy, right? And a retest of the order block wouldn't be a bad thing as well. Something that I just wanted to mention is the gold and silver price that Kyle was just talking about, how they've retraced pretty heavily. We may see some kind of pullback on both, like say Bitcoin, Ethereum, and the rest of those as well. It might be somewhat similar, right? The markets they seem to move in a bit of harmony at the moment. They're all in sync. So a pullback wouldn't be a bad thing. There's a gap down here. That volume wouldn't be a bad thing. To throw up some indicators and to see what's going on. So this is Ichimoku, an indicator that I used for one of my trading strategies. It's been very bullish and it's held fine, right? It's starting to flatten out here, the cloud, which is telling us that trend is starting to roll over, potentially consolidate, and the lagging line over here is also now pointing down. So it's just saying be cautious, but we have just pulled back into the moving average type part of it. It's not a moving average, but it works somewhat like one. So if you've ever used with MAs or EMAs, they pull back into them and then they go for continuation. What you see here is when it goes away from it, comes back, goes away from it, comes back, right? So we're doing that at the moment. Where we are now is very healthy, not too afraid of that. Coming down to here would be perfect, which would be the baseline as well as the 382 fib. That would be a great entry for a long off the order block here as well. So what I'll probably be looking for over the next couple of days, because these are 4-hour candles, this can take time, is maybe some kind of consolidation and holding it above this level, which is that 10,435. And I could also just, because what we saw earlier today, if you guys remember, was this big dump candle up here. It was this morning. This guy here moved, how many $100 is that? That's from 11.2 down to, okay, so it's, what's that, $600, right? It's a $600 dump there. So with that in mind and how quickly and easy that is for them to achieve, the market makers, right? We could see our candle close here, but we could see a wick down, all right? And which could close the gap and it comes back up. We're seeing crazy stuff happen like that before. But if we do start trading below this weekly order block that I've mentioned, I'm not going to be too happy with that. So going to be a bit cautious. Just going to trade the trend right now. The trend is up on all time frames, right? The weekly now has the higher high. Let's get rid of the indicators. Here we go. So the weekly has now got a higher high, right? So the original low, we got this high. You could call that maybe a low. That's a high, maybe. Low, a high, a low. But now we've got the higher high to this high. That is massive. That is massive. This is weekly structure. And this is where I lost my bearish bias once we started trading above that. But if we do start trading back under this and we can't get back above it, then that's also a concern as well, because it's a weekly level that's being acquired. If we do lose that, in my opinion, it's not a great outlook, right? So this is the 4th time touching this line since the fractal was built back here, the top, right? So you got 1, 2, 3, the 4th time. Usually it breaks on the 4th time, any of the fractals usually. So if we do fail here, for me, that's a bit of be a really cautious sign. So keep that in mind. This pattern now does exist and it has played out perfectly. This is a right angled broadening wedge, right? So the price broadens, the top's flat, you get a nice little handle at the end and then price goes. The target for that is actually, which is pretty crazy, the low from here to the high of there, right? We have to go on linear and then take that up to the high. So this could take a very long time to achieve, but this is the fractal and how it's traded. You get in where we are now, that's your take profit, which is 17,000. You'll see these on, I'm pretty sure it was the SPX, pretty sure it was the SPX in 2016. I think they had this pattern twice. Pretty interesting one. Not seen too often on small time frames or higher time frames. Quite rare, really, actually. But it's usually a massive reversal pattern. And there's a massive, the last dump, there's a liquidity grab. And sometimes there's another variation of it where you get a 4th one down as well. But because we've got that weekly structure, I'm now cautiously bullish. Just want to see this weekly close and where it closes. The higher the close, the better, obviously. And 11.4 or 11.5, this range here, we somehow got above that and closed that. I think we're going straight to like maybe 16, 17 pretty quickly.
That 11.6 level is like, that's game over. Basically.
Yeah, that's game over for the Bears. If we can get a close above that, if something drastic happens this week and we end up here, I think it's game over for the Bears.
Pretty much.
All right, I'll pass it back to you if you want to do a quick market analysis. I think it's going to be really cautious this week. Expect anything. Once we get that weekly close, then it's game on based on where it closes. It's going to be a little bit more patient for me.
All right, I'll just take over. So yeah, basically looking at this fib, haven't come back down too far just yet. Like, you know, a few of my friends have messaged me like, oh, the pullback's so big, you know, it's pulled back 7-8%, right? 7%, but it just had a 26% rally with pretty much zero pullback. So you got to be realistic. Remember that these big flags, like this one, for example, remember when we topped out at this, you know, we had this big pullback that was quite aggressive, right? 19%. It's way bigger than what we're experiencing right now. And this could come all the way back just to close that gap, like Troy said. So, but I'm not sure it's going to go in one go. For me, you know, I'm thinking it's probably going to end up flagging out on top of this order block. This is typically how things happen. We'll find support at the 382. and possibly come back down to 618. We'll see how it plays out. But yeah, pretty good price action so far. Can't complain. And it's really this order block level 3 here that needs to hold the support and resistance flip at 10,500 that we're sort of watching at the moment. And then on log scale as well, we do have the all-time high trend line, right, which we're sort of just sitting on at the moment. So a little bit of a breakdown right now, and we'll just see how that ends up playing out, right? You're always going to have a pullback after you have a $1,500 candle on a daily, right? This silver pullback's been pretty crazy. Not really sure what I want to do with silver trade yet at the moment. I actually took profit on this one here, and then it had the extra pump. But it just felt like, it needed some sort of a pullback. But I'm not really the biggest fan of just longing into something like this. Like, there's no real setup for me. Like, that's just a huge bear div. But I don't want to really short this thing because it's just broken out of a 7-year sideways accumulation, right? So we want to still be looking for long positions, but I think what we'll do is we'll start to build some sort of a structure, and then it will flag out somehow, and then we can get in the next trade for the next move up. I think gold is the same, actually. Right, so this is a gold market that we've been looking at for a fair bit. It came back down below the previous all-time high, and that was something we talked about a little bit that we were actually expecting, that we would come back and retest, do a bullish retest of the previous all-time high, and then continue on, because whenever market pushes, it needs to pull back as well. The ASX trade started to play out, sort of pulling back a little bit now. I think it might be getting dragged down a bit by the US market, if I'm not mistaken. Sort of not looking too amazing at the moment. Let's get our proper chart up. This is the one. Right, so we got back above the swing high, right? So like the swing high, when you pump like this, the swing high before the start of whatever pattern it is, it's always a really important level. We're sort of like chopping around. We got above it, then we got below it. Like, when you're underneath it, again, it doesn't look very good. But when you get back above it like this, it's starting to look all right. But when you get back below it again, it's been rejected from being above it twice. It's not really the best sign, in my opinion. So maybe something like this might play out tonight, and we can get a further pullback. One of the things a lot of people have been talking about recently as well, with the closure of the global economy again, with the wave 2 of COVID and everything like that, everyone's having to close back down again in the US. And in Europe, it looks like they might be closing down again. It could have a little bit of fear again, and we're going to roll over and see new lows. I mean, for me, the market structure and the price action is still quite bullish. So I'm not expecting any crazy breakdown or anything like that until, we start to break to new lows. I think if we get below this 29, 24 sort of area, right? If we flip that into resistance, like we have a big breakdown like this, then, once we get below this level, all right, can start to consider it to possibly be bearish again. But I think it wants to test a new all-time high. And for me, it's sort of like just playing a guessing game. Like, a lot of people coming out with theories and all that sort of stuff, but I just think a lot of it's just pretty much BS and just people randomly guessing, because you're trying to guess when the Federal Reserve is going to stop getting BlackRock to prop the market up, right? It's like, how are you supposed to predict when they're going to make that decision? It's pretty difficult, like, actually trading a market so much. But just watch the market structure, because it might get hints as to a bit of a breakdown. What are the altcoins that we want to look at? KMD. All right. Look, I mean, altcoins, Jesus, they just all got annihilated. It feels so much like the 2019 pump, where altcoins were all rallying really hard. Do you remember that, Troy?
Yeah.
Everything was pumping. I remember ADA did that huge, 80, 90% pump, and everyone was, it's alt season. And then Bitcoin finally broke out, and everything just got annihilated. And like, to be honest, whoever was asking about KMD, it looks like utter garbage, because most altcoins have managed to get a bit of a pump at least, and it's actually done nothing from its lows back from October 19, right? So Yeah, for me, I just can't get involved in something like that. If it did this and then reclaimed, I could get into a long there. And if it broke down below that, then I'd be out. But that's pretty much it. But those are sort of the best trades you're going to get on these sort of things, or a breakout of a range high, right? So maybe you miss the spring, you miss that, and you get something like that, right? So that would be your entry there. What else were the other ones? We got Q&A. Metal rocks. Can we explain the order block? Troy is going to go over that pretty soon, actually. What do you guys think of the DXY? Let's go and have a quick look at the DXY. Get it back up. It's trying to get a little bit of a bounce when obviously everything broke down, but to be honest, it's not looking amazing. It's trying to reclaim this level here, but I think I still think we're going to get a little bit of a rally, right? And it goes like this and then breaks down into this level back here. As explained on, if you watch the video on Monday, this is the key level through here for me. And I think, you know, it might bounce here, have its final bounce, and it's going to do something very similar to this. And you have your Elliott wave to the downside sort of play out. Something like that would make a lot of sense to me. I just feel like, you know, with the Fed like printing constantly, gold pushing so hard and silver pushing so hard, yeah, it's going to be tough for the DXY. And, you know, like you got to remember as well, like the US government, they want the DXY to drop. So I always say, try not to fight the Fed. Try not to fight the Fed, because they can just change the rules to do whatever they want, right? All right, let's get the chat Q&A up. Order blocks, R&D pump today, NIM USD, ADA. I don't even know what NIM is, so I probably won't check it. Do you know what that is, Troy?
What's that?
ADA. I mean, it might get another leg. The only thing that I'm really cautious about is it just does something like this, you know, which would be pretty similar to last year, right? So it had this head and shoulders pattern breakout, right? Right, we had this breakout. It was a really nice pump, right, from the right shoulder. It was about 80%. And then, you know, we had the big original pullback, just similar to what we've just seen. And then it just bled out, right? Just bled out really badly. So I just got to be cautious on alts, especially against Bitcoin pairings. Well, Bitcoin is obviously above this key breakout level of 10,600. The other thing to note as well, guys, we've got the monthly coming up. When's the monthly close? Close on Friday, right? And Bitcoin has only ever closed 1 month of its entire existence above 10,800. So keep that in mind. It only ever had one close ever above 10,800. So keep that in mind, because this is going to be a key level. So you can put it into your charts to get the monthly up. Just put a line through here, and you can see I've got it marked out as key monthly. It's at 10,760. I think that's a pretty important one to take note of, because we want to get a close above there at the end of the month. So it'll be Friday or the Saturday morning close. That's going to be. And yeah, we can see here it's trying to bounce off the trend line. So let's see what it does. Definitely expecting bullish momentum to continue after this move up here. I think once it gets, you know, builds its flag pattern on the 4 hour or hourly, whatever it ends up doing, the next breakout will probably be violent again. And it's sort of looking like, you know, you can just see it just looks pretty bullish at the moment. It looks like a falling wedge, right? So eventually that's going to probably break out to the upside. Jesus, there's lines everywhere. Eventually, you know, that's probably going to break out. Looks like it's starting to put in its bottom now, right? So something like this, a reclaim of this level here. So the swing high here, reclaim of that level actually isn't a bad entry, in my opinion, right? So that does something like that. There's sort of the entries I really like. I just feel like they're quite safe. You know, pumps up, has a really nice bullish pullback. If you don't get like the bull hammer, like this could have been an entry, stop loss underneath here. You're really close to order block as well, so it's probably going to get a rally. Might have to switch it back across to you, Troy, so I can get a long in. But But yeah. So that's pretty much it, guys, for the market wrap up. I don't want to get into too many shit coins. We've been going for 26 minutes already. Let's get into some of the content. So what we're going to cover off, Troy's going to take us through his routine checklist. So I'll handball it back to you, Troy, and you can get going.
Sweet.
Some of the guys are asking for ETH, Troy. Maybe do that as one of your first charts.
It was a strong weekly close above here. Daily.
Weekly doesn't look good, does it?
Not at the moment. No, it's only Tuesday, so.
Yeah, it is very early. Very early.
We've had an intense rally up. I'd expect consolidation. Some kind of sideways range for a bit, maybe.
So somebody in the chat group just asked, actually, could you explain the difference between perpetual, future, spot, and the variations of those trade pairs? So perpetual is basically what we call a perp. So it's a perp swap. So that's basically a contract where everybody's trading contracts back and forward with each other. So there's always a buyer, there's always a seller, selling and buying and selling contracts to each other that are based on an underlying asset. So you're not actually trading the underlying asset. Futures, so perpetual just continuously goes forever, right? It's back and forth forever. And so they have funding fees to make sure they don't run away from the spot price. So the spot market is the underlying asset. So that's when you buy it, you actually own it. You don't just own a contract to sell to back somebody later, right? That's the daily funding fee, yeah, on perpetual swaps. And futures is a market that opens at a specific date and then it closes at a later date. And they usually last for a month, 3 months, or 6 months. Sometimes you have yearlies, but not very often. So hopefully that makes sense. Handball back to you, Troy.
Cool. I'm trying to find the chat real quick. Zoom always runs off of it. Let's bring the chat back up. Here we go. Found it. Cool.
So I'll just cover this one. Somebody asked, what do you use each for? It's probably important for the newer guys. The perp swap is basically, so I'll start off with spot. So you buy Bitcoin with Australian dollars or US dollars and you hold that spot. And typically we use the spot Bitcoin as your collateral to then trade to long or short the market. And you can have collateral in USDT or whatever if you want. But when Bitcoin's in a bull market, you want to be holding collateral as Bitcoin and not in USD. So you're getting the gains even if you're not making the trades, right? And then if you're making a trade, you're getting the trade and you're getting the gains on top of already holding. So you're making money on top of making money. The futures, we use those to trade against our perp swaps, so it's like for hedging and stuff like that. Or if you want to do a longer term trade that's going to last a couple of months, you don't want to have to pay fees on that because the futures don't have fees. So that's pretty much it. All right, you're up, buddy. Get into it.
Cool. All right, we're getting to the content, guys. We're going to work on technical analysis strategies. The thing I want to get across, and I'll probably say it multiple times, like last week was know your data. This week it's going to be technical analysis is not a trading strategy, right? When we come and map out the market like this and put the fibs on, the order blocks and indicators, we're not actually going to go and trade that. We actually need a trading strategy to be able to then take the trade, right? So all we're doing is mapping the market when we start applying stuff to the chart, unless it's actually part of our trading strategy, right? So if I think that's pretty straightforward. I won't go into it too much. So I'll go back to the form. I've got a routine checklist I usually do. If anyone watches my streams that I've done over the years, usually I have a pretty religious approach to it, which is I first start on the higher time frame and work in. I usually always go to the weekly, unless there's a monthly close due. Start on the weekly and move in, and you're just trying to find key levels based off candle bodies, right? Just like we covered in the video on Monday. If you guys watched that, like with Ethereum and Bitcoin, saying that if we did go to breakout, pay attention to the specific levels. If we break above this, then expect upside with volatility, and then if we break above that even further, right? So that's what you're doing is you're mapping out the macro levels or the weekly, Now they let you know where major resistance is, and they also let you know what to look for when the weekly candle closes. So right now we're currently hovering around above this, which is fine and well. We're above the order block here, but if by the end of the week we close under that, that's going to tell us that that was a complete rejection of this breakout, and we should be pretty concerned. If we close well above this on the weekly, like where we are now, that'd be fine. And we look maybe for some sideways before some continuation, or some further upside, right? And we can just use these as an example. These candles, when they achieve specific things, like this one here, first it struggled with the order block created back here. First thing came up to it, it rejected. Well, not rejected, but it didn't breach it. Got above, a bit of a pin bar, evening star reversal, and then whatever. So this is just mapping the market. I'll teach you how to do order blocks real quickly as well, because that'll be the first step of it, and levels. So we'll go back to this. The very first step should be trend. Okay, so you first need to identify your trend. Your bias should be based on the trend, not on the global events, because as we learned this year, I learned very well that the trend doesn't give a fuck about global events, right? Markets don't care about logic, they care about greed, and greed is a dominating factor in a market. So to identify a trend, you start on the weekly and move in. So for this we'll go to a different chart where it's BTC USD on Coinbase. We'll get some more data, or even Bitfinex, right? So we're in a major trend here, and it is an uptrend, right? So even though we've spent 2-3 years through here and it's been horrible, we're still in a major uptrend, right? So until we make a low past this low, we can assume this is still part of an uptrend like this, right? This is the macro level. So right now we're in a bullish macro market. So the market on the macro is bullish. On the weekly at the moment, like I said before in the start of this, we have now just created a high above this high. So our weekly, even though we've got a lower low, we also now have a higher high. So we need to really take that into account. And when there is a swing low, whether it comes lower than here or not, as long as it's higher than this one, the trend will continue to the upside. You'd assume so anyway. So you'd come up, wherever we start to return, you come back down and then carry on up. And when these happen, when these downtrends happen, these pullbacks happen in a bull market, they feel horrible, because you don't know if that's the top or not. When each one of these dips happened back here in 2016 and 17, there was articles out that China was banning Bitcoin, Russia was banning Bitcoin. It's all a Ponzi. It's all, so you don't really ever know when the top is in. So you've got to keep playing it high and low the whole way, and just identify those as you're trading them. So on the weekly, these swings can take quite a long time, right? So that's an entire year from top to bottom here. And then back to here is another year. So these weekly swings can take a long time, which is weird. It doesn't feel like it has been that long, but that's nuts. When you're on the daily time frame, this trend's completely different, right? So we can see there's definitive highs and lows throughout this entire thing. So we'll just start here. We had a low, had a high, we had a lower low through here, then a higher high, and then a lower low again. So it was broadening, right? But because we had the lower low to this low, we had to be quite cautious. And until we breached this high, the daily trend was still down, right? And we tried to do it here, rejected, but now we've breached that. So now we have the higher high on the daily. We've got the low. We've got I don't know if you could call any of this a low. Maybe. Would you call that a low, Carl, if you're still around? I'm not sure if you'd call this a low or it's more of a consolidation period. It's not a definitive low where it's come down like this and carried on. Right, it's just come up and then sideways and carried on. So I don't think we've had a daily swing low yet in this entire thing. It's just been pretty full on really since the COVID dump. So you want to map this. So if your if your weekly trend is now up, or we've now got the higher high, your bias on the macro should be, in my opinion, bullish. Right? Ideally, we'll want to get a weekly low, and then start hitting back up again past the previous high. And that's when we're in a bull market, like officially in a bull market. If we get a weekly swing low and then carry on, right? I think that's what this was, and this is the beginning of it, like it was back here in 2000. And look at it, like in comparison to the halving event back here. That was, it was here, I think. Cool. So you can see there was no real ever pullback. It got crazy bullish, come back down, carried on. So you can see these highs and lows. So you want to identify them, and you want to trade that trend. You want to be looking for longs in an uptrend and shorts in a downtrend, right? And then you've got the 4-hour time frame as well. So the way we usually teach this is literally just use the text tool, all right, and then just identify the trend as it forms. So we're going to say a low here. And this is a great way for beginners to start. Actually identify it and actually label it out, right? So you mentally got to actually take note and not just skim through it. So then we've got our high. We're just going to assume the chart started here, okay? So we got our low, got our high. We'd call this a higher low, right? And then a higher high. So what we're mentally taking aware of here is that trend is now up, right? Then we got a higher low again. All right, got a higher high again. So even though we have these pullbacks and the rest of it, the trend is still hitting up. And then we got to a point where it consolidated and just went sideways. And that's why this became very hard to trade because there was no real trend. Anyone who dominates in a sideways market would have had a field day through here. I am not one of those people, right? I trade trend. So now that we've got this part of it, we've now got a higher high again, right? And we could maybe call this a low. I wouldn't really call it because it's more of a sideways consolidation, but because the daily trend is now up, and the 4-hour trend is up, and the weekly trend is up, we should be favoring longs over shorts, and we should be buying dips. That's how I do it until this invalidates. We don't quite know what's going to happen yet. The weekly close will give us a lot of information, and we've also got the monthly close coming up. So these two closes coming up are very critical, I believe, now that we're broken up out of this consolidation range. The first thing of the day, if you haven't done it already, is maybe you have a chart. You can have a secondary chart and just label or just mentally take note of the highs and the lows, just to get your trade direction in the right suit, right? Because if you're looking for shorts up here in a potential bullish pattern, right, you can say, okay, the 30-minute trend is now down. I've got the high, I've got the low, I've got the high, I've got a lower low, a lower high, and a lower low. The 30-minute looks like it's down. But it could be the reversal point off a support here. So what you want to be doing, instead of trying to short, well, you can short this on maybe a smaller time frame, but instead of trying to short that, you'd wait for a long entry and wait for a trading strategy to allow you to long, because the trend is your friend. And if you fight trend, you'll have a hard time, right? You want to try and increase the odds in your favor, and trading with the trend increases those odds, right? So we'll go to the next step. So identifying trend. As boring as it is, or as simple as it may seem, it can catch you out sometimes. Find key levels, right? So for me, I usually start on the weekly, like I've done. I think I've shown you this before, but we'll do it again. We can zoom right out. So the weekly, you're taking you zoom in right out to get like a good look at the market. You want to see, okay, if I'm trading price over here, what can affect my price? If I'm swing trading in the next few days or the next few weeks, or what can affect my price right now, right? So there's a key level, I think, through here, all right, which is the low of this candle. This is what we call an order block, which I'll get into next, this little candle here. So by identifying this stuff before we even look to trade, you know where major resistances are. So if you were, for instance, looking at a trade and it looked like it was doing some kind of consolidation underneath this, then that would be a bullish sign. But if you were doing maybe some kind of bearish pattern within this, you'd assume, okay, it's rejecting the order block, right? So you've just got to know how to identify these levels and then what to do with them once you have identified them, right? Because just like sloped trend lines, when you come down like this, right, and people say, well, it's too subjective because X, Y, and Z, you can't use those and they're rubbish. Well, if I throw a rookie in front of a chart as well and say, identify the key levels on the horizontal, right? Each one of these points that I can move this mouse is a $1 movement increment, right? So how do they know to identify the right one? So horizontal lines are also very subjective. That's why we're going to teach you order blocks and key levels now. And that we want to look for identifying or we want to identify key swing lows and swing highs on a weekly. You'll find that these levels from like here, or the swing high here, the candle bodies themselves, right? They create levels that usually get quite respected later on. So for instance, the low of this or the high of this, right? When we look right, price had a really hard time at it. So if you had a long strategy right here below it, after a candle like that closed on the weekly, and you're trying to go long in here, you might have had a really hard time and not understood why. But identifying these key levels before you start trading, in my opinion, keep you out of a bit of trouble. So identifying the key candle and a trend that comes down. A good example would be in this trend to the upside here. This is how we identify order blocks. So say the trend is coming up, right? It's all green and green and green. We've got this one red candle here, right? It stands out. That means price consolidated here for about 3 weeks. 1 week, 2 week, 3 week, right? And what that does is creates a level of support here, right? There's a lot of orders bought and sold here. Price is going to be attracted back to this if we ever fall. And if we use that same technique before, is using just a horizontal ray tool at a key level and marking the bottom, we can see this is a pretty key level through here, right? And then if we identify that entire candle, what I usually do is use the rectangle tool, come into the settings of it, and drag that to the right. We can see this was a major support level for the entire year, and then looking right as well, right? It's been a major level just by identifying that weekly candle and understanding the power of it. I believe on other exchanges, it actually came right down to the exact dollar of the bottom of this. So being able to identify these candles that go against trend can help you a lot. Here's another example here on the way up, all right? We printed one little red candle here and a second one here. So if we go and apply that same approach to these two, put them on the bottom, you can put them on the top as well, all right? We can see price came to it, held it, it's come out of it, right? Was resistance for a long time, got above it. Once it closed below the Marabuzu downside, that's a very bearish candle, and then that was a very bearish candle too, and then we puked, right? Whether this was COVID or not, the TA here and those two candles said to be very cautious once that weekly there closed, right? And we can see this one, that price was defended here, and we got our uptrend. You can just see how it respects these levels, and how to identify these is the hard part, which is very subjective because everyone looks at charts differently, and they get trained differently, which is what makes up our market, right? That's why price sometimes will respect a level that you're not quite aware of. Are you currently using FTX standard setting? This is TradingView. This is TradingView. So if you identify in a weekly trend candles like this, you usually find that price will come back to them. So because price consolidated above it and then launched up, that's actually very bullish on a weekly scale, all right? If they had fallen underneath that or back into it, that would have been a sign of caution. You can use these on the daily as well. But the thing I want to quickly cover before we go to the daily is like, for instance, this is a downtrend, right? We're in a downtrend. There's one little green candle in the middle here. So we'll grab him. We'll just take that same approach, rectangle tool, right? Just draw it from the top to the bottom is how I do it. I double click on the part that's highlighted. I just drag that to the right using the coordinates, right? And change just about 500. And it instantly throws that to the right. How we know this is a confirmation of it, if this price action had already happened, right, and you started trading, say, here or here, the confirmation is that price fell from that point, right, and came back up and rejected. So that's how you know it's an order block or one that has got a lot of strength to it. Okay, so we can see by marking this, when price came down, even though it came down a massive amount, came back up to it and could not get above it, right? So the bears knew, or smart bulls knew, this is where you should be taking profit in this rally. And this can help you a lot. If we go parabolic again, say we do something like this, and there's a little, we have a top and we come down, we come back up, and we print another one of those candles, right? And it does come down, you do take a trade to a long. When it comes back to that point, you should be very cautious, right? The proof is in the pudding, and that's exactly how you identify them. So while trend is down, when it comes back up, confirmation, that's an order block. And then from that point onwards, you can see we couldn't get above. So if and when we get above this next time, it's game on, right? We also need to remember, usually it's the fourth touch that we break out. So got one here, got two here maybe, or maybe that's one. This is going to be two. So maybe we do consolidate here and keep tapping away at it and then go again. Maybe we're going to be here for a little bit longer than we expect, right? If that makes sense. That's on the, we're going to go to the daily, repeat the same step as well, just trying to identify them. The daily, I wouldn't look as far back left, right? You're not going to use a daily order block over here and then be like, okay, 3 years later, I'm still using that. You want to try and stick to, in my opinion, I'm pretty sure Carl will probably agree with that, maybe just somewhere within the year or somewhere within current price action where there hasn't been too much washing. Now, by washing, I mean, if say there's an order block here, and this was one, if price has been in and out of it a lot of times, so prices come down to it, that's not an actual order block, but right, say if prices come to it, come in and out, right, on the daily like this, we call it more of a wash level, and we should look into something a bit more recent. A great one to look for, I think, at the moment that could be relevant if we pull back is just through here, right? So the trend is coming down. We've got these little green candles through here, maybe this particular one. And we just drag that to the right. We can see when price came back up to it, rejected, right, which is just the horizontal level here as well. Price came up to it, rejected, now we're above it. I wouldn't be surprised if we were pull back into that before we carry on, all right, because it's a horizontal level, and this is the first time we've traded above that since 24th of September in 2019, so nearly a year ago. So when you apply that as a technical analysis trading strategy, you'd start identifying the trend and then go for your key levels on the weekly. You can use different colors when you do this as well. So if we do this now, because if you have got a couple of levels in your chart, it can get quite messy. Or you can have multiple charts where one's a weekly dedicated chart and one's a daily. But say, for instance, you wanted to have it all on the one and then maybe use the object tree that we've covered. You can then go into it and change the color of it. So maybe you want to have like a color code that pink is your weekly color, right? And that maybe it has a different thickness as well for your weeklies. So we'll just throw that on there. Then when we go to the daily time frame and try and find a daily level, maybe we'll have that as a completely different color. So later on when you're trading, you know what it is. Another way you can do as well is add text, like daily high of Feb 20 or something. You can, however best suits you to identify it. And then you can call this one as well, weekly OB from 2018, right? So while you're trading, and when you finally go to apply a trading strategy, if your trading strategy has a target here somewhere, and there's also the weekly order block there, you know it's probably going to have a hard time there. So you should be cautious once it gets to it, right? You've already labeled two massive levels above and below price. So if price does start shooting up like this, we know it's probably going to have a hard time here. So you can look for reversal patterns and then apply a short strategy on a smaller time frame, or maybe a long strategy now into that. Depends on what your trading strategies are. Cool. So with the order blocks, any questions of that? They can be a little bit hard to find when you first start trying to do them. I think they're a critical piece of information to learn. And I'm happy to do a video after this. I don't want to drag this out too long tonight, but just a separate video purely on order block spheres as well. Maybe get that out because they are a little bit hard to find. But as you can see, if you know how to do them, right, if you know how to actually find these and do them right, they can save you a bit of a headache. I think weekly and daily are the best to find massive levels, and then you can apply the same logic to a smaller time frame. You can say that the 4 hour. They do have order blocks as well, and they are respected as well, but they get washed sooner, and they don't. They're not as serious, right? So a weekly order block is going to be a major level. A 4 hour order block, we test it, you guys. Like forward test this as a classroom. If price comes down to this, let's check in the next video in 2 days to see if price came down to this and bounced out of it the first time it touched it. So wash means that so once it was created, wash would mean that it came straight back through it and didn't really respect it, right? So I'd assume if we are going to consolidate here, this level will hold the first time it comes down to it, right? So the word order block comes from where institutional order block. So that's where institutional money usually places their buys and sells and the rest of it. It's usually like a bit of a supply and demand zone as well is another name for them, because as we can see here, right, there's a lot of there'd be a lot of demand here. All right, no, so it'd be the opposite. Sorry, the demand will be on the bottom. There'd be the supply up here. So it's a level that's, yeah, liquidity pools. There's so many different names for them, right? I treat them as institutional order blocks because that's like the indicator VPVR. If you've got this, I won't go into this too much, but this is also another way to help you identify them, VPVR. All right, and it shows you on the right here where volume has been at the price level. So usually you have your volume down here, right, and this goes along like this on below your chart. This is saying the volume at that price level, right? So they're a bit big at the moment because we're on the weekly and we're zoomed right out, but it's telling you where a lot of volume happened at a specific price point. And these can help you identify order blocks as well, right? Because this is where a lot of time and price was spent, right? So this level was telling us, even by this indicator, it was telling us there's probably an order block here. So you can use this to help that as well. Understanding where these nodes are, these volume nodes, liquidity pools, order blocks, or demand zones, supply zones, they've all got different names. How to identify them can really help you understand how to map a market, right? So we'll go back to this. We've got the order blocks. I'll get a video out on top of that, how to find those, because they are a little bit hard at first. Key levels, it's pretty much just candle highs and lows, and it can be from the daily and weekly. When you start trading intraday time frames, maybe even a 4-hour, all markets, they're all markets, guys. Everything we teach will be all markets, unless it's an FTX specific thing. Technical analysis is like a universal language. So on the 4-hour, for instance, there are key levels as well. Say, for instance, the low of this, we drag that to the right now. We can see once that was finally lost after multiple touches, it was more of a capitulation, a race to get out. But once we finally actually reclaimed it here, it was bullish. So this is the same kind of structure as on the weekly back here, but just on a smaller time frame. We'll go back to Bitcoin. So it's just the same logic, just on a smaller time frame. It's going to understand that on a smaller time frame, it's not going to be as relevant as long, right? So a weekly order block so far has lasted 3 years, 3 years here. Where on a 4-hour, it might only last a couple of days, and then it's been washed. It's no longer as relevant. So just keep that in mind as well. So we'll go back to this. So next thing is patterns. So this is a bit of a harder one if you're not familiar with patterns, and there's a lot of them out there. There's a lot of memes about them as well and the rest of it. But the market moves in patterns. The market has fractals that it repeats over and over again. And there'd be like a lot of small fractals within this period of time on a smaller time frame, right? So this is a 1 weekly candle, and within that weekly candle to be created into a pin bar like it is here, there would have been a lot of price action on the 5-minute, the 1 hour, the 4-hour, and the rest of it. And they would have all had their own patterns and waves of motion, right? So all patterns are just specific highs and lows. So for instance, the ascending triangle down here, all that is higher lows while price can't make a higher high. It just goes sideways, right? Just like up here, same again. This is making lower highs and higher lows until price breaks, right? So all these pattern names is just a noob-friendly way, is how I'd call it, to identify specific structure in a market, right? So for instance, this one that we've been watching for months now, this has been ages in the making, because we were saying that could have been a possible broadening wedge back here before this even played out, and it has played out. But all this is what we call a right-angled wedge or broadening wedge, because it's getting wider and wider. So that's why it's the broadening part of it, right? And now that we're above here, what this tells traders is to understand the pattern. This is a very bullish recovery. It's like a V recovery, right? And once it's recovered, it's game time to a new high usually in most markets. So if you're ever bored one day and you want to backtest this pattern, go and find it on daily or weekly timeframes on older markets, and you'll see just what happens when they finally break out, which is why I've had to really put my bearish bias on hold because I understand fractals and I can't be in denial that this is not a bullish play here now. So if you understand how to find specific patterns, I can't teach you them all, there's too many. But if you know patterns or are aware of them, or you want to incorporate that into your trading, then have that as a step as well. Because for instance, if you're in a large pattern, like say this symmetrical triangle, and you've identified this early, or you've identified this this pattern here, like me and Kyle did. So me and Kyle analyzed the living crap out of this back in 2018-19. We had Wyckoff, we had ascending triangles, and a bunch of other stuff like a Adam and Eve. All these different patterns were all saying bullish. So we got really bullish in here and played this perfectly when it came to the breakout, right? To make sure we're in Bitcoin and to ride that up. So because we were able to identify the pattern on the weekly before we started trading, or whatever we were doing at that time, or up here, we know, okay, volatility is getting really low here, right? And there's going to be a break either side, just like you guys would have seen over the last 2-3 months up here, right? So it got to the point where something had to happen, right? We had a series of higher lows and lower highs and broke out, just like this, and broke down, right? It's really simple stuff. And all they do is they give you a bit of a heads up, right? So if this is starting to look really crap through here, like it did, I'm going to then look for maybe short opportunities or wait for the break and then go short. But because I've identified the possibility of these patterns that play out over and over again, right, on all sizes, this entire big thing is just one big one as well. When you understand what's happening on that level, you can then start to make better trading decisions. So say, for instance, we've got an ascending triangle playing out here, which has got measured moves and targets and the rest of it. We know that if and when this is breached and starts heading up, we can maybe start increasing our risk appetite, or maybe we can start looking for not to recommend being riskier, but we can start looking for larger position sizes or smaller time frame longing. Like a lot of bull season trading me and Kyle do is usually on the 5-minute time frame, and we just trade pattern after pattern after pattern, because when the trend is very bullish, it's just pretty much just a flag after a flag after a flag when it heads up. An example of that is impulse move, right? And then you've got a flag, right? And then it goes again. Impulse move, you got a flag. They're everywhere, right? It's just consolidation periods before it goes again. And this, they happen on all sizes. They happen on the 30-second chart all the way up to like the daily chart. So just understanding those fractals can help a lot. And then we've got possible trading ranges. Now this one's a little bit harder as well. Kyle will cover Wyckoff later. I'm pretty sure he's got that on his last one here. Wyckoff, yep. So what a trading range is, I'll just cover it quickly, is exactly what we've just been in. All right, this has been a trading range. And what that means is you're not actually trending in the sense of the larger time frame or whatever. You're stuck in a period where it just bounces between the two, right? And usually this is an accumulation or a distribution pattern, which means that either people are buying or they're selling. So even though we've pumped up here, people then, if this is accumulation, we don't quite know yet because it hasn't completely resolved, right? But if this was accumulation, this was what we call a trading range. So usually when you can identify these, it can help with a trading strategy. When you come back up to the resistance, you can look to sell it, right? If it then loses the trading range and comes back in, this is where I got quite bearish because it rejected the breakout of the trading range that we started to form, right? And then it rejected it again, and I got really bearish, which you guys would have maybe have seen the Wyckoff post that I put up, because this is a Wyckoff potential distribution pattern, but it looks like it's just become an accumulation pattern because this is pretty bullish. Another example of a trading range back here, which is another fractal or a pattern that you guys may have heard of, which is the inverse head and shoulder pattern. And all that is just a really noob-friendly name for a specific set of sequences of highs and lows. So you've got a low, you've got a high at the same level as the next high, you've got a lower low, right? And then it also has the same high as the previous ones. Then you get a higher low, right? So this is a reversal structure. All that is a reversal. So it's just a noob-friendly way to say, okay, a reversal is happening. And you're finding this at the bottom of a downtrend usually, which is exactly a really great example right here. But by doing what it did, it actually created a trading range, just like what we saw back before. Comes down right? I lost that level, came back and recovered. So that's looking pretty bullish. And we can see that price action got bullish, right? Had a healthy retracement, held the low of this low, right? The high was actually higher than that low, which is how the pattern traders would trade it. And because this candle here closed higher than these two over here, there's a really bullish sign. And you can see it just took off from that point. And then we went on our journey to 10.5K up here, right? So that's another trading range example. So if you've identified you are in a trading range, you should be very careful of your bias until you've broken out. So while this is forming, and say for instance, the market is about here now, right? We can see, okay, we're in a sideways market somewhat. There's no real trend happening. So the top is for selling, the bottom is for buying until it's got above or below, right? So we can allow it just to play out real quick. Buy the bottom, sell the top, maybe buy the retest, and then carry on, right? Or if you hadn't taken profit here because you understood the reversal pattern, you could allow your win to carry on, right? So that's a trading range. They exist everywhere. And then once they break down either side, usually that's it. But if they come back into the range, you need to be careful, right? Here's an example. Just for here, came out, got back in. So we've got a bit of a range here. Couldn't get above, couldn't get above. Very bearish candle behavior here, and then just bled out. So that's trading ranges. When you combine all of this stuff together, it gets a bit much, and sometimes some are all playing at once. As a rookie or someone who's having a little bit of a hard time, it can be quite a lot to bring in all at once. So you can even just stick to like maybe one or two of these things just to get your head around it and just master a specific thing first. And if you are a newbie and you do have a bit of a harder time picking up this kind of stuff, because I remember when I first started learning, it was quite hard to learn at all. I think stick to key levels and order blocks. And these three, you must identify your trend, but that's pretty straightforward, that one. But identifying and mastering horizontal support, I think, is king, right? There's a meme that goes around with technical analysis, and that is people start with horizontal support and resistance, then they go on their journey and they learn trend lines and indicators and the rest of it, and they always end up back at horizontal support and resistance. That is probably because it's the most easiest to follow once you've mastered it. But like I was saying before, if I gave a rookie a chart and said, go find all the resistances and the supports, the specific critical key levels, they'd have no idea where to draw their lines, right? So they're just as subjective as the rest. But once you master it, it's key, I think, right? So moving on from that, go back to this moving averages. So these are a little bit different in the sense. The way I use these for technical analysis is just understanding where price is and relevance to it, right? So I wasn't going to trade the breakout purely based off moving averages, but if you guys watched the video on Monday, I'll just quickly bring up just the main ones I use, which is the, let's go into it here. This is an indicator called 4MA. You can find it. It allows you to have 4 indicators in the one, 4 moving averages. And I ran the 20, the 50, the 100, and the 200. So what it was telling me was price was above all the moving averages, which is very bullish on a weekly structure, but the 20 was also coming through the 50, which is very bullish as well, right? So that gave me, as a bear, a heads up that maybe it's time to start paying attention, because after a consolidation period like this and a play like that, it's telling me that the trend is shifting, right? And we go down to the daily, we can see the same again. So the 20 came through the 50, right, at the same time as the weekly one. So it's telling me to pay attention. We're now above all moving averages, above the 20, above the 50. So that's a great bullish sign. And the 100 is above the 200, and they're all perfectly in sync. So this is what a bullish trend should look like. So if we go back to say 2000 and when this last season broke out, right? We'll say after here. So we'll say we're like here, right? So we're like right here somewhere, because we've just had the sideways structure, and now we're just broken up like this. All right. So the perfect sequence was when they were all above each other in this range, right? And we can see that once that played out and we broke up from a consolidation period, we just took off, right? So this is the moving averages on the daily and then the weekly. and you'll find that when we have pullbacks, when we have these massive, it feels like death at the time, because usually the articles and FUD is pretty intense, but we can see that the 20 MA holds the entire time. And as long as we're above the 20 MA on that time frame, in my opinion, we are bullish, right? So if you go down to say the daily, the 20 moving average is also the middle line of the Bollinger Band indicator. So if you've seen that, I'll just bring that up real quick. I'll just get rid of, no, that can stay. But that blue line is the middle line of the Bollinger Band. So if I hide the moving averages, you can now see the red line, right? So we've got two lines looking at the same price level, average. And based on Bollinger Band, when you're above it, you're bullish. When you're below it, you should be cautious or bearish based on what the trend is doing, right? So you can see it pulls into it, falls down further, gets above it, pulls back into it, carries on, right? Very simple. So I keep the 20 moving average as a part of my technical analysis, but I never really actually trade off it. I never set a buy here and go, okay, well, we're going to pull back into the 20, I'm going to buy that. But if we do some kind of consolidation pattern into it and then recover it, I'm going to be bullish, right? So it's not a trading strategy. For me, they're a technical analysis thing. I'm just understanding what the market's doing, right? Because they tell you a lot of information. Cool. And then we've also got technical analysis is not a trading strategy, which I'll keep smacking into your heads. A lot of people may see a level, and what I mean by that, they might see a level here, price will come back to it, and they'll buy just because it came back to it, right? You want to have more conviction than just a level being touched to buy. So technical analysis is mapping where the supports and resistances are, and then the trading strategy is then executing based off a certain set of criteria once that price reaches that level, right? So combining the two usually leads to a bit of a lethal combination when you've got your statistics. Bit of a checklist, which is just a repeat pretty much of this, but broken down into time frames. All right, so I'll put this in my Discord, and I can put it in Kyle's as well if you like. Just how to approach it. So you can even you could copy this or edit it and just choose what you wanted, or you can create your own entire training, technical analysis strategy from scratch. And all it really is, and it needs to be like a checklist based. So for me, if you've ever seen me chart something on a stream from scratch, it'll look like this, right? I'll go to a chart. Actually, we'll use an altcoin instead of Bitcoin. Let's go to, say, actually, we'll do Ethereum. So when I first come to a chart, I go straight to the weekly, and I'm looking to identify key levels and order blocks, okay? So looking at this straight off the bat, I can see an order block that I'm interested in, and that was the downtrend, right? But a white candle by itself where it consolidated for a period, right? And then confirmation of that is when price came back up to it, it was rejected at it at first, right? So we'll just go and use the rectangle tool here and go into this. Use the settings. I write 500, and that just drags it to the right for me. Because if I start dragging this around like this by myself, and then try and then marry it up over to the other side, it's never accurate, and I like accuracy. So I use the coordinator tool to do that. And we can see this level's been pretty key from that point onwards, right? Very bearish candle, couldn't hold it, tried to go, couldn't do it, and down we went. Came back to it again, down we went. So I already know if price was back here somewhere, to be concerned about that level once we got to it. So if we went down to, say, the 4-hour real quick and just press play on this, just an example, when we finally get to it, hopefully it doesn't take too long, be in the 4-hour on the weekly. Here we go. Cool. So on the 4-hour, you can see when we first got up to it, we rejected it the first time, right? So that's what I was mentioning before, that if you identify this early and you had a trade that had take profit around here somewhere, or you're going to take profit at the order block and then reconsider if it got back in the order block, and that helps you with that trading strategy, right? So go back to the weekly, identify key levels and order blocks is usually how I start. Because I've been doing this for quite a while, usually I can just look at the chart and see the highs and the lows and understand trend very quickly. We've been in the sideways market here. There's not really highs and lows, but we do have technically, right, a higher low here. But we also had a lower high as well, right? So we can see some form of potential flag or something forming down here, which is then broken up, all right? which is of interest as well as a pattern trader. The furthest point of a pattern, if you are a pattern trader, is usually the target, right? So if we were to break up to here somewhere, let's drag that to the right, we can see there's another order block here. So as canny as it may be, that price action down here is actually sending us straight to our next resistance point when it comes to order blocks, right? So let's bring that up. So we haven't tested this yet, so we don't know if it's going to be a strong one, but it most likely will be on the weekly because we haven't got back data to say, okay, this level is a level. And we've also just covering the weekly lows, the candle bodies. Always good candle bodies. Some people do wicks, some people do bodies. I personally found best results out of bodies. But if you can see on this one here, we go left. That was probably a candle wick of this one, maybe. Not quite. We didn't quite reach it. I always use candle bodies. I just find them to be the cleanest, right? So these two levels here, I'm interested on the way up from here as a weekly level. We can then throw on some indicators, moving average, right? So the 50 is now above the 100 and the 20 is now above both. So this is a bullish, right? Nice, it's all starting to wind up a bit, which is to be expected after that price action. But these are weekly. These take a long time to curl. So that means all of this price action here has now been factoring in, and they are starting to curve up. So it's showing the trend is heading up. It doesn't mean that like dips are illegal. It can definitely dip back into the moving averages, but we just keep that in mind as well, right? So we've got the key zone order blocks on the weekly, right? We found that one. Got the one above it. We'll get our key levels as well. I'll get rid of these indicators now. There's no more information to find them off them on the weekly. I've identified a potential pattern and its potential target. I don't have to have that line there. I can just go in here and write that if I wanted to, which is just at the top of the order block, right? It's pretty canny how clean that is. So I've done what I would usually do, and then indicators if I'm going to do anything on top, right, or a trading range. But the trading range, we can already see that the roof of this order block is what's creating the trading range, right? So there's I'll just use this tool. We can see through here, we would bring this down for confluence to this high, that we're in a trading range through here. And then coming down to this one, I'm going for confluence over all else. So whether I go for candles or wicks or whatever, I don't mind. I'm just trying to identify the trading range, right? So we can see, like we were talking about before with Bitcoin, high to low. So once this is formed, once these 3 points have formed and fallen back into that, I'm going to assume if and when it comes back to here, that's the point to buy, right? Which is then going straight to the point to sell, and then to the point to buy. And then we'll come straight through the point to sell, right? So you could have sold some and rebrought. Yes, so order blocks are, once you're above them, they're strong support. Once you're below them, they're strong resistance. Usually the case, as you can see here. Right, once we got above it, price tried to go, got rejected, fell down, right? And that was actually when Bitcoin topped out back in 2019. So because Bitcoin dumped, it took Ethereum with it. And then this here was the COVID dump, right? Which just happened to be at the order block. Go figure. Cool. So we've got our weekly levels done. This is no relevance to me here. I'm going to delete these, keep my chart as clean as I can. We don't really need this. It's a long way away from price. And then come down to the daily and just rinse repeat, but more for current price action. Yep. So SR flips are quite strong. What that means is that resistance became support. In this case, for instance, so what we did, if we were looking at the chart from here only, right, we can see there's a level through here, right? Price keeps rejecting here. Now, maybe that was just the low of this. So the daily low here, couldn't get above. All right, couldn't get above. We finally get above, we get a bullish retest in here, and price goes away. Another bullish retest, because we didn't lose the level, and then away price goes. So identifying the daily key levels as well is just as important. So I'd usually use the low, like I mentioned before, and the highs of the swings, right? And what that did was identifying these actually created the trading range here, right? So price got stuck in there for a while, which is what we've just experienced the last few months. It created that trading range. So first it got into it, rejected, came back to it. So once we've got those 3 points, we're going to assume we're going to range until we don't, right? which then the point to sell, the point to buy, the point to sell, and then if it came back down here, we'd buy. Because it got through this, wicked under, and then closed above, that's very bullish, right? So our short would have even taken profit or been stopped out based on whatever your strategy was, but now we're bullish. The trading range has now been broken, and we're away, right? So identifying these key levels on the daily has helped us, if we were trading that, make the right decisions, or just understand where a major resistance might be. So if you saw this massive boom candle here, right, and then the candle after it failed to get above as well, then maybe you'd be looking for a reversal structure through here, more so than a continuation structure, if that makes sense. So continuation usually is some kind of flag or some kind of trading range before it carries on, where a reversal structure is more like a low, a high, a higher low, followed by a higher high, but then it comes back usually to this low, or it can sometimes be on a bit of a slope as well, where it comes back to here and then bounces, and you get the lower high before it falls and carries on, which is the head and shoulder meme, right? That people talk about. But all it is a noob-friendly name for a reversal, because for it to reverse, it has to make a lower high. So that's all it really is. So that's what we'd be looking for in here, right? So if we go down to say go down to the 1 hour, just there, use this tool, and go back down to the 1 hour. Let's have a look and like what caused that. So that's our best friend Bart, right? And this is the trading range that we're talking about. So now there's a small time frame trading range, and when price comes back into the trading range, you need to be very cautious, right? It couldn't hold it, and then down we went, which is what I was talking about earlier on Bitcoin back here, which is why I was very cautious, because it did that here, right? And it started grinding down. So I was looking really weak once that happened. And that's a great example of it on Ethereum here on the 1 hour when we zoomed in. All right, so once it falls back into that range, you need to be cautious. And all of that price action happened in just these little candles, right? So this is the daily candles. From the 1 hour, there's an entire trading range, a breakout, and then a fail. So understanding the different time frames helps a lot with this. But right now, in this, we're in the trading range. All right. You can just see how effective they can be and help you guide your trades. When you're trading sideways, you want to be long in support or buying support and then selling resistance until it doesn't work. So, for instance, the flag pattern that Nugget and Kyle and myself all trade is fibbing the beginning of the impulse move to the top of it. Right. So I've dragged this to the right, but I'm going from here to here, dragging to the right. And when we come back to that 618 golden ratio fib here, right, that's when you want to be looking for a reversal structure, right? And that's what's happened here, and then it's gone. So if and when this is forming, you need to be aware of that. So once you've hit the trading range a few times, there's going to be resolution. And what that means is sooner or later, one of these sides is going to break. So you want to be looking for that as well while price is forming. So this is a nice flag pattern that we always talk about, the flags. Right, this is a perfect version of it, and it just completely went. Cool. You guys all following? Any questions about this? And you do this on the different time frames. So you start on the weekly. You get to choose your own versions of this. I highly recommend sticking to these three at first. And then if you know your patterns, maybe add those. Moving averages can be a little bit of a harder one. The 200 moving average and the 20 and the 50 are the three that I'd probably recommend for technical analysis. The 100 is not as common. It's not as common. So you can even get rid of that guy because he just adds more noise to your chart, right? The 20, the 50, and the 200, I'd highly recommend. Does the fib apply to bear flags? Yeah, it does, dude. So it's just the inverse on the way back down. So a bull flag usually is trend coming up, and then you have a small correction or some form of retracement, right? And then you carry on. The opposite is this. You have a trend down, and then you have a period of up before continuation, right? So these are all technically small bear flags, and this is a bull flag. So trend coming down, right, is usually bullish like this. That is bearish down. This is bullish down, right? So when we zoom out and go back to 2017 and 16, because that's probably what we're going to experience in the coming months or next year or two, is these downward periods they're actually bullish in a sense, as long as they usually have an SR flip, right? So usually how they work is you want to be identifying, looking left and identifying key levels, right? So the high of this, we're a wick to, and then recovered. So once that happens, you'd be like, okay, that's an SR flip, which is what we just talked about, right? And that's what that is. That's bullish continuation. That's exactly what we're looking for. And then you can probably do the same thing again. The impulse candle here, right? The high of that, you can see that's where it's retested, right? You'll master this over time. SR means support and resistance, sorry. Yeah, so you'll start to learn a little bit of lingo as you get into trading. If you do trade technical analysis, you're trying to abbreviate things just to get through it quicker. So if different time frames, when it comes to technical analysis, you're just trying to identify the strength or relevance of specific levels. The higher the time frame, the more relevant it is, the stronger it is, right? So a weekly resistance here, for instance, is going to be very strong, right? And the weekly candle has to close above there to be super bullish, right? So we're coming up to that now. If we get to close above that, guys, we're on for a serious run, I think. So keep that in mind. And that's why we're doing this on the weekly and then moving in. So right now, we found a key weekly level there, maybe a key weekly level right there as well, because we can see price loves that level. Yeah, I can throw a copy of these slides as well. And I could give you guys a copy of this as well. Go back to this chart here. Here, so we know that's a key level, right? And that's exactly where it rejected, just by being able to identify this on the weekly here. We didn't know it was going to reject there, so we can't say foresight. We can email the links to it, definitely. But identifying the order block, trend is down, one green candle, trend is down. Price came up to it, rejected. Here is a confirmation of a perfect order block, right? Rejected, rejected, rejected. Fourth time it touches, it broke out, which is to be expected, right? So we've done the weekly levels and order blocks. We can use them either way, right? Cool, cool, cool. And we can even look further left, right? So I was looking at this candle in specific for a while, right? Because the trend was up for a second, had a little bit of consolidation, then up further. So I was actually watching this candle as well, and I'll show you why. So even though it was a little bit ugly, as to me, it still had like a validation to it, because once it was created, price never really escaped it. Opened above and then closed back in it, and then got back. Oh, need to redo that. But okay, so it was just here. But when it finally came back to it, rejected. All right. The fourth touch of Greg. Usually, yeah, that's just like a I don't know what the word is for that, but it's just usually how it plays out, right? It's just usually what happens. It doesn't always have to be the fourth touch, and it depends on which time frame you're looking at it, right? So if we had a trend line here on the weekly through there, we got one touch, two touch, three touch, fourth touch died, right? But if we were on the 4 hour or the 8 hour or something, that probably had 200 touches, right? So there's a lot of touches right here. Could have had two here maybe, 2, 3 here, right? So it really comes down to, you've got to maybe just play around and just understand how it plays out. Usually what it means is on the time frame you're doing it on, that over a period of time, the people that were holding it down here, right, they're running out of steam. The bulls, because they keep bringing it back to this level, are getting more and more strength each time it touches it, because the people that were selling probably either out of the market or moved on, or just whatever reason, right? So you usually find those as key points. Just another example of a trading range. We could be in a weekly one, right? Like what silver and gold has done for the last 7 years. We could just be in one large trading range, and maybe we should still here to then come back down to here. We don't know, all right? And we should be very cautious once we reach up here, because it is the key level, which is why me and Kyle are saying if we get a close above this 10.5 range, it's game time, right? Because we'll be out of that range. 1 hour is more for trading, right? 1 hour is more for trading, or helping identify structure. Oh, beautiful, nice pin bar. Are you long, Kyle? Did you long that? This is a nice flag here, right?
Yeah, I am long actually.
Fucking knew it.
I went in long as soon as I handed it over to you.
Yeah, it looked good. It looked good. So the 1 hour, you could say, for instance, if you're not trading the 1 hour, you just want to do technical analysis on the 1 hour, you'd be looking for maybe a bullish retest for this level, right? We've got a 1 hour pin bar. So what this candle here is telling us that after the dump, right, the bulls are back in control because they rejected the sell-off and it closed back above the previous one. That's actually looking pretty fucking good. I'm jealous that you're long and I'm not, because that would have been a setup that I took, right? From an order block point of view as well, guys, we can maybe assume on the 1 hour there's an order block here, okay? So when price came back to it, it bounced off it, bounced off it. So it's a bit of a level. If we went down to say as low as the 5 minute, I don't recommend trading on the 5 minute if you guys are new, but we had a trading range or a flag, so two different things happening at once. We came back to it and see how on the 5 minute completely bounced out of it here. But when we go back to the 1 hour, all that was a little candle here, right? So it's not law that it will bounce every time, but you will find if you start forward testing and back testing this, once there's a candle of the opposite color and trend like this, usually when price comes back to it, it will respect it. So you can add that to your arsenal as one of the points that you look for. Say, for instance, if you're looking for a long to buy the dip or the pullbacks or whatever you're doing, it's just another point to add to it. No, so the higher the time frame, the stronger the moving averages are. But it gets to a point where it's just stupid. So on, let's say a monthly, we go to the monthly and add, say, some moving averages because time doesn't go back that far on most charts, right? It gets to a point where they're not really relevant. The 20 is definitely relevant through here, right? And we've held it through here, rejected the dump by closing back above. The monthly and the 20, actually, that's a bit of a thing there, right? Got above it here. See you later. Got back above it here. That's why I'm bullish, guys. Like, the market is now printing all the correct things to be bullish. So, cool. I spent the last 3 years scalping, and I put up my scalping boots pretty much once COVID hit. I decided I was going to go for more of a macro approach to the market. Scalping is great fun. It's a good way to learn because it's just the same price action, just quicker, right? So all the stuff that happens on the small time frames happens on the big time frames. Exactly the same play, right? So looking at this right now is a pattern that I trade, and I'll show you the big version of it and the small version of it. So this is why I would have taken this long, because I would have saw the pin bar and the broadening descending wedge here, right? So this is a particular fractal I trade, where there's 3 dips. On the 3rd dip, you normally get these pin bars. You normally get a lot of buying pressure, and then away you go. Target 1, and then usually target 2 here. And you can see that's where price started to fizzle at, and that's where price started to fizzle at, right? So this is a massive pattern I trade, right? But if we go out to the daily time frame, that very same pattern is where are we on the inverse here. So this entire Bitcoin bull run of 2017 was just a big version of it. So this is why I love patterns, because they're everywhere in this market, right? This is ultimately the same thing. You got the 1, 2, 3, 4, 5 comes back down. We've just done the inverse of that all the way over here on the 5 minute. All right, down here, 1, 2, 3, 4, 5, and then launch. So that's why I like patterns, because they're everywhere on all time frames, and you can adapt your strategy to them based on how you want to trade. Right? That's looking pretty good. I think this is going to end up as a consolidation. I don't think we're going to go higher yet. That's a pretty strong pin bar coming on the 4 hour. Full clout mode. So combining all these things and repeating these into a religious approach to a chart. So we go to any chart. Someone was saying metal before, right? So when we come to this chart, we want a blank chart, and we just quickly smash it from a technical analysis point of view so we can understand what's happening, right? So if anyone was bullish on this right now, I pity them, because, sorry, Kit, I know you love this coin, but this does not look good at all. Because if you look at this wick here on that last weekly close, it actually swung into the order block and rejected, which is what we're concerned about this week with Bitcoin.
I think that's actually the worst chart I've ever seen in my life.
It looks horrible right here. This is exactly what we're worried about with Bitcoin right now. What I am is that it does come back under the order block we've just covered, right? And then dies. So let's say, for instance, this is Bitcoin over here, and we'll go to the weekly, and we'll just color that order block in so you can see live what I mean. I think it was this.
I didn't even realize Metal was still a project that was running. I thought it was a dead project.
And Marshall's still pretty active too. I think it will become something.
Yeah, okay, interesting. Maybe it just keeps getting pumped and dumped.
Yeah, ultimately.
But
if you look at this, right, if Bitcoin ends up closing back under here after doing this wick, right, it's gonna die. It's gonna be a race to get out, and then where support holds is another story. But that's what Metal has just done. It came into the order block, right? Rejected, 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 pumped, swung the high of these, and that's exactly what we don't want to see. And then that's exactly what we assume would happen on Bitcoin. So just keep that in mind. That's a really good example. So I'm glad you mentioned Metal. Because I hope I maybe just saved you a couple bucks as well. I don't think you can leverage trade this. Here's an order block I'm looking at here, right? So price couldn't get above it with candle bodies, right? And we can see probably for the entire way that helped create somewhat of a trading range, right? So when it pumped dirtily back in March this year, it ended up back in this range. So it wouldn't be a bad idea, Kip, to look for reversals here at this low. But in between this, I mean, you're crazy, especially for Bitcoin bullish. I mean, right? So there's a level here. We're on the weekly. If we close above that on the weekly, maybe you got some kind of chance of a reversal back up. But that's not that candle as a bear would excite me because I'd be shorting the shit out of this, or I'd be dumping my bags. All right. So just keep that in mind. Trav's trade journal. He was keen to help everyone out. I told him to make a web page for it. So hopefully he's got that sorted or getting that sorted, just so I can direct you all to one thing. If you know how to find Trader Travis, he's in Nuggets group, he's in my group, Carl's group, and his own group. You can just harass him if you want to hit him up. He's always eager to help people. He's a great guy, very genuine. He'll probably encourage you to make your own so you don't have to spend money. So he's not out to make money. This is purely because I mentioned I use his one, remember? But he's happy to help. I told him to make a website for it, so it was easier. Cool. All right, we'll move on from Metal, but that's a really good example of a trading range, right? And the candle you don't want to see next week on Bitcoin. If Bitcoin looks like this, be very cautious or just tighten up that risk management, right?
Can we do ICX?
ICX. We can do ICX real quick. Actually, I need to stick to a disciplined approach to this and not get carried away. Here's an example of one. I don't remember doing this. Looks like I took a trade and it played out. But you can see I've already identified the levels, how I would have done it back then. And you can see it's in a bit of a trading range at the moment. I tried to get out of this level. It's failed. It's come back to the support, just like I've been talking about, right? So this is an old chart. So next, I'd identify the order blocks, which I've already done, but I've only marked the level I'm interested in, because if it went past that level, then I'd be worried about it then. So I identified ICX as order block, downtrend, a white candle, downtrend, a white candle. And this could potentially be one here as well, actually, because we can see that when price came back up, it did reject here. And then once we look right, it probably bounced off that on this little bit here. Yeah, it did. Cool. So we've got 3 order blocks. We've got our weekly levels. We can probably add this as a level as well, the low of that, and possibly the low of this, which is looking like where it bounced, right? And then go to the daily and rinse repeat if there's anything to be concerned about. Right, so there was a daily order block here. It did bounce the first time it came to it, right? And then Bitcoin got really bullish, so you got the hell out. There's a time and place to trade both. Alex, you need to know what your strategy is to the market. So when it's an alt season for alts and they're all flying, you can really increase your Bitcoin quantity by trading the BTC paired alts, which is what this is, ICX BTC, right? But let's say, for instance, you're not interested in Bitcoin as a pair at all. Maybe you don't even like Bitcoin. You have the option to then trade the USDT pair. So you're not concerned about Bitcoin. You can trade this chart as a, that actually looks great, as a SR flip right here. If this closes here on the weekly above up here, this could maybe swing back up. Good level to watch. But it depends on what you're trying to achieve. For me at the moment, I'm more interested in US dollars than I am in Bitcoin, which may change shortly based on the weekly close. But you kind of got to know what you're after. If you're a long-term Bitcoin bull and you think Bitcoin's going to $100,000, when the altcoin market, which is easily trackable on Bitcoin dominance, which I'll go to now, when this is trending down like this, right, that means it's alt season. which was seen many times before, like from pretty much late 2018 to before Bitcoin broke out from the 3K range to 14K. When it's trending down, it's an alt season. So you can increase your Bitcoin quantity, right? But if you're looking to trade with Bitcoin when Bitcoin's trending, you can then look to trade USDT pairs. So you can also increase your Bitcoin that way or increase your USD value that way. A good example of this is XMR, right? So at the moment, Bitcoin's been surging and a lot of altcoins have been dropping. Like Link is down massive amounts, but XMR hasn't cared. It's trending up. So sometimes with these alts, they actually outperform Bitcoin, right? Ooh, looks like a bit of a dump here. A bit of an old chart. But sometimes they actually outperform Bitcoin. So it depends on your trading strategy. If you wanted to trade a bunch of different, so say for instance you're a day trader who has to pay their bills, and you don't have enough capital to pay them, or just whatever your excuse is, and you want to make $100 to be able to pay an X bill, you don't really know how much Bitcoin you need to do that, do you? Because Bitcoin can change in value by 5% pretty quickly, like it did today. It dumped, I mean, instantly about 5%. So you've now, if you had a debt you had to pay that was $100, you've now got to get another $5. When you're working in round numbers like USDT, you can, for instance, you can go to bed knowing that if you had $100,000 in your account, you're going to wake up with $100,000 in your account. Where with Bitcoin, for instance, going to the chart, if you went to bed with $100,000 here, you'd be up 10%, right? So you'd have $110,000 in, and then you'd be up $125,000 in this period, right? But if it did the other way and you had bills to pay, so your $100,000 and it dropped down here, you're now only going to have, say, $75,000. So it really depends on what your trade plan is or what your strategy is or what your risk management allows for. For me, if this weekly closes up here somewhere like this or above this up here, I'm going to be looking for Bitcoin quantity over US dollars, right? It's going to be a bit of a race to get out of the US dollar, really, which is technically what buying Bitcoin is, right? You're selling your USD to get Bitcoin. So you want exposure to mostly Bitcoin when Bitcoin is bullish. If Bitcoin consolidates sideways, then you need to work out what you want. They've both got their advantages, and they've both got their time and place. If and when anyone traded this, right, when they started trending up, anything paired against Bitcoin, dumped. So all the altcoins, they started doing like a 90% retrace, which is what's happening here now. And just like Kyle showed on the chart before, we go look at Link Bitcoin, right? It's come down quite a lot, right? Oh, hold on. So far, in 2 weeks, we're down 37% already. So who knows? I might just come back to this level here for a retest and carry on. But these retraces happen and they're brutal. So when Bitcoin's bullish, like it is right now, you don't want exposure to these altcoins, in my opinion, or have a very small portion of your portfolio in them if you do want them, because this will just suck the life out of those altcoins. People don't want to own altcoins when Bitcoin is bullish. This period here, if we go look at, say, metal, like we were just looking at, when Bitcoin broke out, we can probably find it on the chart. Be back here. That's exactly it. It's move over for the king, right? So April, I think it was April the 2nd, we broke out. So where is that here? April the 2nd, 2019. Wow, this is Jesus. Here we go, cool. So we broke out on April the 2nd, right? So metal, 2 days beforehand, pumped crazy. But then was it for it. Did 100% pump and it was over. And then once Bitcoin got bullish, it bled out 80%. And I believe that will happen again if Bitcoin gets pushing up like this. So you can be really careful of that Bitcoin dominance. When the Bitcoin dominance chart here, BTC.D, you can find it on, starts getting quite bullish like it did back here, it's time to consider reducing your exposure to altcoins maybe, because they do retrace and none of them are special, right? Once this broke this bull flag pattern that we were talking about earlier, the fractal, right, it was go time. And this is when Bitcoin, all the altcoins bled out between like 70 and 90 something percent each. So we're just starting to repeat that kind of same behavior here. The cycles are very hard to play, and I don't know if I can give you an exact answer to that. F is definitely an altcoin, but it may keep up with Bitcoin because there may be demand for it. Some altcoins may move with Bitcoin. You don't know which ones because they all have their own cycles at different times. So there's no real exact answer you can give someone when it comes to this, which is a bit of a pain, but it's more of a learn thing. But if you can see that Bitcoin's starting to consolidate, right? So this period here, let's dissect this. Right, this is start of April, and this is September. So this period of September 18 to April 19, we'll go look at that on the Bitcoin chart. We'll go down to the daily here. Cool. So the Bitcoin dominance chart said that while this was playing out, right, the altcoins probably were starting to get accumulated. And then while this period here happened, it was an alt season. So if you look back at the Bitcoin dominance chart from the point of capitulation, which was November the 12th-ish, go back to this one. November the 12th is back here, right? So we dumped off, everyone started selling everything. And then when everyone was selling everything, smart people were buying alts here because it became an alt season for about 3 or 4 months after that point. So there was no exact point saying, okay, it's time to get into alts because people didn't know this was going to be the bottom, right? And I think not until it actually made the higher low here that the alts that really started to explode, right? Because there was a defined higher low here. And alt started to get really, really bullish in this last part here. And as you can see on that metal chart we just had a look at, just days before this happened, metal pumped their coin 100%, or someone pumped metal 100%, right? We can have a quick look at XRP USD. But yeah, I hope you're getting that. Cool. So real quick, daily, right? Rejecting this level so far. So be cautious of that. Weekly. We're above the low. It's a good sign, right? We've turned it into support. A good sign. If the weekly closes above this high, great sign, right? Which is probably also, if we drag that left, the low of this, okay? So we've got a few supports that we're above, and a weekly close above that would be great. And then we've got this little red candle and a green trend. So we've watched it the first time we came down, but as we can see, we came back to it and rejected. So we'll keep that level as a level of interest, and now we're coming back up to it here. So it's getting to a really interesting point. XRP is, right? And it's got a higher low here, right? But doesn't have a higher high yet. So you need a weekly close above these highs, and I think it's game on. That's how I'll be looking at that. Won't spend too much time. But you see here, this is how technical analysis helps you make better decisions when it comes to your trading. So a trading strategy is, okay, if we're going to apply a trading strategy to this is how I'd look at it, which is a bit intense for people who are not sure what they're looking at here. But this is Ichimoku telling me it's bullish. It's above my 30 VWMA that's bullish, but my indicator down here is telling me be very cautious. So maybe there's a correction coming. And because I checked my technical analysis and it said there's resistance right here, maybe I'm going to allow this to play out instead of taking a trade on this time frame. If I'm really keen for a trade, maybe I'll come down on a smaller time frame and look for my criteria to be met. But it hasn't been met here, so I can't take a trade. 1 hour, can't take a trade, right? So just because the technical analysis is looking good doesn't mean I can just go jump in willy-nilly with it, which is a good example at the moment. I'm looking at IOTA USDT, really interesting level. Look, it's just had a bit of a sell-off actually. On the weekly here, there's a specific trend line that I'm watching, right? And we're at it right now. So technically, it's starting to look pretty good if we can start closing above this on the weekly. It's doing some form of consolidation above here. I might end up coming down for maybe one more dip. Oh, wrong tool. And I'd look for a higher low to be put in here from this low, okay? Ideally, I'd like us to hold above this low. So whatever happens here in the next few days, I'd like to see it hold above this. And I can even then use a fib like we did before, right, and bring that up. And we can see that it's holding the 382. So maybe this next low it does, we need to be above that for me to be bullish, right? Really interesting spot. And technical analysis allows you to know that you're now at a major point of resistance, so you should be quite concerned and be ready for either direction to play out from here. Not saying that can never, like no other point that can reject and the rest of it, but this is just added resistance, right? So we go and then look at Bitcoin's chart and apply that same trend line approach from here down to here, right? We can see once these 2 points were created, the third time it came up to it rejected. So applying that same logic to IOTA before, we've now got these points. Maybe we'll reject, come down and try again, or maybe that's where we are here, and the next week or this week we're going to end up exploding, right? So that's just technical analysis, and that's just assumption. But that doesn't mean we can jump into a trade now. We need to then go apply a trading strategy that is checklist based to allow us to get in. Right. Cool. I think I've covered everything here, and I'll make a video on order blocks and how to find them for you guys and get that out probably Thursday or Friday. I've got a day out tomorrow, so I won't be able to do that tomorrow, but I'll definitely get it out to you on how to find those easily, and you can use that as a bit of a reference point. I'll pass it to you now if you want, Kyle.
Sweet. Let's do this.
Cool. Take over. Let me go long now.
All right. So we are going to go through the move contract because this thing is pretty fucking fun to trade. Let's be honest. Who doesn't want to get a 17,000 ROE? So anyway, these are a couple little returns. Some of them are mine. Two of them, one on the left and the one on the right are mine. One in the middle is one of the guys in our Discord actually, and he's had a few amazing trades actually longing it, which has been pretty good. So this long here on the left of 2,721 was the one was actually when we predicted the Bitcoin breakout earlier. Let's go to, I'll go to the daily. Earlier in the phase of the breakout of the triangle, which is actually this day here. So we just had, you know, Troy was just talking about the wick off patterns before, right? We just had this sideways, like really low volatility, like hardly any moves. And we ground, you know, into almost like, you know, some of the, like the move contract was expiring at like $10 and $15 and stuff like that. It was crazy. So, you know, whenever I just thought, maybe not 10, but I mean, we got a couple of 20s, right? Pretty nuts. But, you know, I was just late at night if, you know, nothing had really been happening that much. Like the move contract like might still be like $80, but the intrinsic value of it was like $10 or $20. So I just short it, knowing that there's only like, you know, 8-9 hours left until daily close, and it'd be very high chance that I'd end up making profit on that. So there's a few things that we need to learn about. Right. Typically, I've found that the move contract is actually better to short because you have the whole thing of time decay over time. So basically, the way it works similar to how an option works, right? And basically, you have an expiry, which is every day. So we're looking at the day contracts. You can have the next day contract as well. So we've got the day contract. This one is the next day, and then you have the weekly, the next weekly, and then you've got 2 weeks ahead of that. And you also have the quarterlies and stuff like that you can play around with. We'll touch a little bit on those a bit later. But it's really important to understand what the intrinsic value is, which is the value of the coin, of the token, of the contract, sorry, if we closed at the current price, right? So we can see here that throughout today, it absolutely launched and ended up going up to like $700, right? So the $700 is indicating that there's traders that think that the price of the move contract will close $700 away from where it opened, right? So I think this is my move contract trade account. Here it is. So we get this guy up. I'm just going to have a look. So we get the daily. This is a little trick that you want to start out doing. And so the first thing we want to do is just get a horizontal line and put it across. So here, making an interesting color so you can easily identify it when you're on the lower time frames. We go in the text box and we go daily. This is a great little trick so you can sort of, you know, see where we're at on the lower time frames. Oh, that's a 4-day. We want the 4-hour. Hang on, we're gonna have to go back. And just make sure you got the visibility set so that you can see on the hourlies, right? So that's why it wasn't showing up. And actually, you need to drag that across. All right, so now we can go down to the 4-hour. So there we go. So it's where the daily open is. We can see the various 4 hours. And by the way, we're about to close a 4-hour pin reversal candle in 9 minutes, which is definitely something you probably want to be getting long on. I don't know. That looks pretty damn bullish to me, and I would expect continuation off that. But sometimes you get these pin bars and it still comes down like that and then goes off anyway. But a lot of time these end up just playing out and going. But you can get sideways chop before a move up anyway. But usually what happens is the low of the wick doesn't get broken. So when we enter these, we enter like this, and the wick would be below. You'd be looking for wherever the target would be. But that's how you enter into that trade. So you stop losses below the wick, you give it a little bit of space so you don't get wicked out on SFP. And then it sends, all right? Okay, so back to the move contract and how we want to be trading that. We have our line through here, which is going to tell us, it's all the way over here. Actually, a better way to do this, to be honest, we go out to the daily. Instead of using this tool here, which is just a trend line, use a horizontal ray, and it will always be in the corner of your screen or the side of your screen, right? So get that one up. I like to have pink for the daily open, right? So try and use the same color, it just helps with recognition. Daily open. And then when we go down onto the lower time frame with the 4 hour, it's still going to be there, right? And then when I scroll in or out, it stays. So pretty handy. Right, so we can go into the 1 hour and have a look at it, and you can see how the daily open is actually a really important level in the charts, right? So we bounced off it here, right? Then we come back under it, and then we also rejected it here. So you can use that actually as a key level to trade off. The same way you can use the monthly open and also the weekly open price reacts to it a lot of the time as well. And when you're trading like the 1 hour and stuff like that, it is important to know where the daily open is, so it does help out just for your trading and scalping as well. But so for the move contract, right, what we want to be doing is we want to be calculating the intrinsic value. So the intrinsic value is from the very top of where the day opened, right, which is right here, get it right on, is 11,064, right? And that's down to where the current price is. Right? So that's $85. So we can come back here and we can see that the move contract currently is $339, right? And the intrinsic value is actually $89, right? So intrinsic value, current price, right, is down here, right? So if we drop from here and we close the current value of the contract, right, it's probably not going to close here, but so if, let's just say I was betting one move contract, which would be $330, that would mean that on a drop from down to here, I'm going to make $264 per one move contract, right? So hopefully that makes sense. And don't worry about like all the big percentages and stuff like that. It's probably too confusing to get stuck into. But all we want to be doing basically is when we think that price is going to go back towards the daily open price, we want to get short. When we think the price is going to move away from the daily open price, we want to be getting long, right? So if we now flipped to the other side and this starts to get quite bullish and we start to break out, we're probably going to see the move contract dump off a little bit more as we get closer in, right? Dump off a little bit more as we get closer in, and then it'll probably start to send. All right, it'll start to send back up to these highs here. So when the market is, we're in these big wick-off accumulation ranges, which happens a lot. Like, let's go and have a quick look at Bitcoin. We'll get this market. We'll go look at Bitstamp. Right, we'll go look at Bitcoin's last bull market, right? So, we've had these reaccumulation patterns, which, they can go for 45 days, right? This one had a little bit more volatility in it, right? What's that? 35 days, right? And they happen quite consistently when we're in our bull markets. You can get these days where its price is not really moving that much and it's just grinding around, right? Like all through here, like these are the sort of days where it'd be perfect to just be shorting the move contract. Because, it's going to open somewhere around $150 even when the contracts are expiring at really low prices. So you can still make, about $100 or $80 or something like that, just betting $100 each day, just shorting it on the open when we're going through like these slow, low volatility grinding times, right? And then obviously when the market starts to pick up and you start to get some explosiveness, right? We get a pump here or something like that, or we get like a first pump here. Then we can start to be looking long on them, right? And that's when we're expecting the price to move further away from the move contract. So what the value of the move contract currently is versus the intrinsic value of where the contract will close if it closed at the current price, right? So hopefully that's not too confusing so far. We're going to look at a couple of little tips and tricks now that you can use to actually work out when the volatility is going to kick in, right? So basically what we're looking for, I'll go over this one more time before we move on though. So let's just say that the daily open price is 930, right? But the current price of Bitcoin is 9,500. Can't read today. So the move intrinsic value would be 200, right? But the current price of the move contract might be like 330, right? Which means that price is going to start to move until we start to move, like the price starts to actually pump again. What's going to happen is the contract of the move contract is actually going to start pushing towards $200, right? So I'll add that in. So the current be like $330, right? So then you have a gap of $130 that you can make if the price doesn't move too much before the daily close, right? And so as we go through like those lower volatility times, prices are going to start to bleed out. So you can get really detailed into this. You can get like the Bitcoin kill zone indicator out. I don't even know if I still have it. Let's have a, here we go, Bitcoin kill zones, right? You can get this guy out. You have to use it on the hourly, and you can look and you can see how, well, that's obviously a weekend, right? And you can see when we've got the weekends, there's a lot less volatility going on. All right, finally got a little bit of a breakout on this one. But generally on the weekends, the volatility is quite low, right? So all through here, we probably could have been focusing on shorting the move contracts because over the weekends, and it's just pretty much free money every single time, right? The only thing with shorting the move contract is you have to understand that the upside, if the market does break out and pump like $1,000, you can lose a fair bit of money. So it can be quite difficult trying to set your stop losses and stuff like that because the market can pump quite aggressive. So, we try to limit it to, so just say like limit it to betting smaller amounts, like $100 at a time until you get the hang of it. And I have been trying to set my stop loss around $100 or $150 or something like that above the price. And if, it pumps that hard, then I'm happy to get stopped out. But pretty much every time I didn't use a stop loss, I actually won the trade and made profit. Every time I did use a stop loss, I got stopped out. So I think you guys will have to test that for yourselves and work out how to use the stop loss and if you want to use it or not. But if you are going to short the market, make sure you're doing it in low volatility times, right? And you're not shorting after it's already collapsed. You want to short after the market's pumped a little bit. Sometimes that can help in those lower volatility times, right? So just pulling up the Bitcoin kill zones, which is just Bitcoin kill zones version 2, right? You guys should be able to find that. And what this does is it tells us the market opens. So yellow is Asia, green is London, and red is New York. And typically what happens is when one of these markets open, right, is when most of the time we get more volatility, right? Doesn't work all the time, obviously, but it's more often than not, the volatility comes around when the market's open, right? As you can see, when we're actually moving a little bit more. So that's a good little tip, right, to help you spot, so you might want to wait until after the New York Open until you start short, because it's a bigger gap from the New York Open until the Asia Open. And that's one of the strategies that I was using. So, I was shorting like all through here, waiting until the New York period had sort of closed, right? So you can see the green ending here. That's the close of the London time frame. So London opens here, closes here. New York Open is here. And so throughout here, there wasn't really that much happening. I managed to get a couple of really nice move shorts in. Right, so that's one little tip. The other one actually is the Ichimoku cloud. And Troy's got a really handy little tip for that. But I can just show you how to set that up, right? So we can go to indicators, Ichimoku cloud, right? And just get that guy out. Right, and then we'll go to the daily. I'm just going to clean this up and just get rid of a whole heap of stuff. Right, so we get rid of the plots, background, or lead line, conversion line, baseline, lead line. Actually, we'll get rid of the clouds as well. Right, so with this lagging line, it looks a bit silly without a cloud. There we go. So with the lagging line, that's a good indicator that we're going to get some volatility in price when it comes through, right? And Troy's really good at this. He's got a whole heap of different examples. And it's 26 periods in front, Troy?
Yeah, 26 behind. 26 behind current price.
Yeah. So price is 26 in front of, so the lagging line is 26 periods behind. As we can see, we're sort of coming in here towards, it was going to cross over through the price. And when that happens, basically, is when we start to see the volatility. So Troy was talking about this on our video last Monday, and we're talking about price cutting through here on the Tuesday. And that is exactly what happened. We cut through price through here, and we got this candle here. And that was one of the indicators that we used to actually get us this trade here, right? So I went long on the next day contract, right? So to do that, we go up here and we go to where it has the BTC tab. And so you got your futures, your perp, then you got your futures underneath. And then this is the current day move contract. And then the next day move contract. If you go and watch the video, we talk about it. And I said that I was going long on the next day move contract because I wanted at least until Wednesday morning. Now, the other thing to know is we usually get breakouts on a Tuesday night, right? And that's some data that Troy's got from doing thousands of back testing fractals with his fractal crew. Typically Tuesday is the breakout day, right? So I wanted to have at least an extra 24 hours and have it until the Wednesday morning to be able to have that time before the time decay in the contract closes. So it's giving me that extra 24 hours of opportunity for the market to pump. And obviously, it looked like this for a little bit and it was bleeding out, and then it launched. So ended up playing out pretty nicely. And this was the result of that contract. So you can see the average buying price was $122. Average sell price was $287. So I made the difference in between that because I was trading with one contract. Now, one thing you need to know when you're trading these contracts, when you're shorting especially, is that one move contract is going to take the amount of capital from your account as margin to hold margin as one whole Bitcoin. And this is how they can protect themselves from, the exchange has to do it to protect themselves from having like a huge move because there's no liquidation engine like what they have sort of on BitMEX, right? Where if it moves, 10%, something like that, you're going to get liquidated. So they have to have the whole collateral there. So it will take out a bigger portion. And so sometimes people get weirded out because they're like, oh, it's saying that, my account leverage is maxed out or something like that, right? When it shouldn't be, because I'm only betting with like $100 or $200, something like that. But you might be betting 3 move contracts. So that's equal to, using 3 whole Bitcoin, which, at the moment is what? 33,000 USD, right? So just, it can be a little bit confusing, especially for you earlier guys, but hopefully it makes sense. Right, looks like Bitcoin's pumping at the moment, maybe. I just want to come and have a quick look because I'm in that trade. Well, the move contract's starting to react anyway, which is interesting. We're getting some volatility. It's starting to kick in. This one hasn't responded though. So it's a little bit interesting trading the next day contract. I find it a little bit weird while you're in the next day contract. So I try to wait until the market actually opens for the current day. And you can always short this at the start if you want to. Like that's what I did with that last trade. But usually you want to wait until the next day contract is ready to open or is going to open soon. Or maybe, you have a big sell-off or something like that on the move contract and you think it's a good opportunity to get in with the extra 24 hours. All right. So anything you want to add to that, Troy, the Ichimoku?
So it's relevant on all time frames. When you're using the move contract, I wouldn't recommend probably going below maybe the 1 hour if you're going to be doing some form of scalping. Probably the 4 hour, the daily, and the weekly are the critical ones. Price usually has resolution once it enters. You'll either get an up or a down or some form of violent move. And you can see that if you go the 4 hour, the daily, and the weekly, all three of them were coming through it at once. And that was just a clear sign there's going to be a bit of volatility, which is when you can then set up a nice move contract because volatility is coming, but you don't know which way it's going to go sometimes, right? So if it's a very symmetrical kind of fractal, if you're a fractal trader, it can go either way. But that's what the move contract allows you to do is actually make profit no matter which way it goes because you've got the volatility part right? So it's just one of the tools that I've been using for move contracts. And then if you can apply maybe, exactly that, they apply that trend line, it was getting really tight. So you've got all these arguments coming together that if you understand patterns, you know when to expect volatility. And that's exactly what I've been doing on the move contract, is looking at patterns along with, say, a lagging line or maybe a still signal from a custom indicator or something, and then shorting or longing based on what the data's telling you, right? But if you come into the end of that wedge lasted about a month. The last part of that wedge was about a month there. So you could have technically nearly gone short nearly every day and made profit during that entire last part of that wedge because we knew that price was just stale, right? It was untradeable. But you can use that to your power and actually make money while it's doing nothing by shorting the move contract when it gets tighter and tighter like that. I think the people who have done tutorials on the move contract have really undersold the power of it. Because as a fractal trader, you know when volatility is coming, right? You know when a certain breakout is going to happen, exactly like we covered on that video where he circled on the breakout. That was so easy to pick, right? So easy money when you know what you're doing. In that sense for the move contract anyway. The market isn't always that easy, and they could have gone sideways for another day or two, but they all came together for a nice perfect recipe there, right? And that played out exactly as we assumed it would.
The lagging span was the one I think that was the brilliant part of this trade.
Yeah, the 4 hour, the daily, and the weekly were all saying that trend was about to reverse, and that's exactly what happened.
So yeah, that's a really good little trick that you can use to help you obviously with longing the market or making sure you're not shorting because if this is going to come in, you're like, oh, it might cross through. I need to be careful and make sure I'm not shorting the market. While the lagging span could cross through price and cause a price spike. Maybe, if there's something getting close to the end of a breakout of a pattern or something like this, you stay away from it or you decide you're going to start going long. So yeah, things like that help a lot. The other one as well is using ATR, which is the average true range, right? So let's just get rid of this Ichimoku cloud stuff. So you go to indicators and just type in ATR. And you get up average true range. Oh, I've got it up twice. Right, so this is your ATR down here. And some traders, especially Forex traders, actually use this because it helps them to set stop losses. So the way that ATR works is it gives you the average range over the last 14 periods. We can change it if you want to, change for the length in here will change the amount of periods. So this is giving me the last 14 days. It's telling me how big of a range every candle from its open to closing price is, which if we're trying to predict how big the move contract is going to be worth at the end of the day, it's a pretty fucking handy tool to have, right? So as obviously this is in a downtrend, we can see that average true range of each candle is getting smaller and smaller and smaller. We can be looking at things like, the possibility of getting into shorts and stuff like that, right? When we have a breakout of the ATR, like we did obviously through here, right? The day before, pretty much the day of, right, can give us a little bit of an indication that might be a bit more volatility coming. This probably wouldn't have helped us that much because it sort of only moved across. I think that would have been a little bit too late. But then, like the understanding could be, I'm looking for shorts while this is in a downtrend, and then once you have this candle and you break out, then it's sort of flipping your bias, and you're going to be looking more for longs because it looks like the ATR wants to build a bit of value and start to swing high, right? Which means the candle closes is going to start to expand. Because remember, the way that markets work is they contract and then they expand, and they contract and then they expand. And high volatility leads to low volatility, and low volatility always leads to high volatility, right? So understanding how that works, so you can use ATR to your advantage, right? And we can see how it sort of works, right? So obviously high volatility, it pumps and goes really high. Then you have, lower, smaller candles, and we start to trend back down, right? So what we can do, let's just say we want to pick out a candle, right? So we'll go to this big one here in the middle, and we'll go down. You can line it up on your screen. You need to make sure it's open so you can actually see the cursor, right? And we can see here over on the right-hand side, which is over here at this point here. So that number there, it's going to change every time I move the cursor. So you guys have to stay looking over here. I'll draw a little green circle here, right? And we're going to measure this candle here, right? So the ATR based on this day, which was 1st of June, 2020, was 522.45, right? So that's the average expectation for that candle on that day, right? Let's go and we can have a look and we can measure it. It ended up being a bit bigger, right? So it was 764. So obviously, when you've got this sort of stuff going on, probably not going to be looking to be shorting volatility, you'll be looking to long volatility. But when we get further down towards like these guys over here, right, we start getting down to, these guys around here, right? We're around 230, right? Even though these candles are really, really small, the average range is quite big because it's using the whole 14 days, right? Right, and then when we get deeper and deeper into here, right, how low does it end up getting? The lowest it gets is around 215, right? So the average candle close for this whole period, last 14 bars, it was about a 241, right? So to keep that in mind, keep that in mind. It can sort of be a handy little trick to just pick the momentum and see where we're going to go. And when you're closing a lot of the time when we're closing below what average true range is giving us, it can sort of help us to give us an indication that the price has been quite suppressed, right? So just another little tool you can sort of use and see if you can pick up any trends from that, right? So moving on, the other thing as well, Troy sort of covered off like wick-off ranges and stuff like that. But when we're in these lower volatility times, like through here, for example, we're at this wick-off trading range that ended up breaking out to the upside. This one way back here as well. Right, this is another wick-off trading range. And I'm not going to get too deep into them, but typically, there's a part in the wick-off trading range, which is usually around this area here. And then obviously you can see throughout here, it's quite low volatility as well. But after you have the second automatic rally, there's usually a bleed out that takes you, and it just slowly bleeds out to the range low. And that's generally a time of really low volatility, and it's designed like the market maker actually does it to try and frustrate traders and just constantly, stop people out. And so when that's sort of happening, that's a really good opportunity to be shorting the move contract, right? And then obviously if we understand how the wick-off ranges work, after we get like a spring and a retest of a range low, like those are the times, we're going to expect a little bit more volatility and heading back up towards the range high. We can be looking to get long on the move contract. And then same as when you get a breakout of a range high, that's usually an indication that we're going to start to get really aggressive, right? And we'll go and look at those again. Right, so this one back here, fairly similar structure and setup. We have swing low, we have our second swing high, and then we have that slow bleed out through here, which is sort of like that falling wedge. And it just is designed to just annoy traders and bleed them out and stop them out all the time. Then when we finally have the breakout, then we move into the high volatility period, right? And we're more likely to get some long trade setups, right? All right, and then obviously throughout here, we've already covered off that a million times, so we don't need to go over that again. Any questions so far, guys? So the lagging line is just price has the same value as price, forever follows price. 26 candles behind, yes. So price has to move for it to move and it just follows. But it's telling you that if it's about to come through the trend from 26 candles ago, the current price may get volatile. Okay. Sweet, all good, all good. So then if we want to enter a trade on this guy, let's just get a long on, because we're going to expect price to probably move away from the daily open. So we'll go back to our chart, right? Because pretty much right now, we're pretty much smack bang on the daily open. Like you can't get much closer than this. What are we away right now? $63 away right now. So the intrinsic value of this contract is $63. So obviously not the next day contract, because we have to once this opens, we have to reevaluate where the current price is, right? So the current one, right? Current day move contract, 336. So the intrinsic value is like right down here, like 60, right? But most likely Bitcoin is going to move away from that. Let's just say if this was later at night after the New York Open, right? So New York's going to open in an hour, which means we're probably going to have some volatility around then, because that's generally what happens. You have the most volatility around the New York Open, which is 11 o'clock. So it might actually be not a bad time to get in a long trade on this. Right, so we're just sort of mucking around with this at the moment. So we're going to put in, we'll do one move contract, right? This one move contract, right? It's going to cost us $334. You can enter into the market, or you can enter into limit, right? So we can just click over here and it'll change the entry price to the current price, right? But you need to be careful you're not clicking here, and then it's going to change your amounts, right? So we want to just keep it to one. Keep it pretty simple. All right, and then we're going to place our order in. So now I've got our buy limit in, and then that eventually will get hit. Now I'm not going to have a stop loss on this, because I'm just trading a contract, and where it expires is where it expires. And we'll see how this ends up playing out by tomorrow. But what we're looking for tonight is, because we've got them in about an hour and 10 minutes, we've got the New York Open. So if we get our kill zones up, we go to the hourly time frame. We go and we get our Bitcoin kill zones indicator up. All right, so we see we had the London Open here. Right, this is us this morning with the Asia Open, right, 10 a.m., which is when the daily open happens. Right, and then we've got the London Open. We've come back, and now we're sort of putting in a bit of a bearish candle here, which possibly could end up playing out as a pin top reversal, but it's still super early days, only 40 minutes to go, right? We are starting to get some reversal signs that price could start swinging back up on our indicators, right? We're starting to come out of oversold on stochastics, and then also a custom indicator, right? That gives us the buy entry. Right, so this could end up pushing high, or maybe even selling off even more, and if that happens, the move contract is going to go up. Right, and so there we can see our move contract just got picked up, and we're in here, right, and then this is all the information. So position size is costing us 1 Bitcoin to be in here, and notional size is $333 with our P&L, so here and everything like that, right? All right, any questions about how to enter the trade? And then we can sell it at any time we want to by just putting the entry price in. You can do it through a limit, or you can market sell to exit, right? Or if you want to get out really, really fast, you can just bang this button down here, which says market close, and that will instantly close the trade and you'll take whatever profit or loss. So basically what we're looking for is the New York Open to give us a little bit of volatility because we're right at the current price, and it's not going to be too long, hopefully, until we get some more volatility. So what will happen shortly is this will go red. We get the red hourly pop up in the next one. The New York market will open, and hopefully we start to see price move away from this pink line. When that happens, it will add more value to the price of the move contract, and we'll make some money, right? So now if we end up closing anywhere between, let me just get rid of this guy. So the current price of the move contract is $340, right? So what I can do is I can get the price range from here and go up $340. Let me, right, that's close enough. Right, and then also go down $340. Right. You can also right click on here and go into settings and go coordinates and just adjust it manually to get it perfect if you really want to. But that'll take way too much time to do right now. And so basically what we're looking at is anywhere within this box, if our daily close is anywhere between here and here, right, that means we're not going to make any money on this contract, and it will expire below $340, right? And we'll take a loss on the trade. Now, if the price moves, the daily open, right, so we'll go back to our daily, right? And so if the daily candle closes above this point here or below this point here, right, we'll profit, right? So this is where the profit starts, above and below where the current value of the contract is. Right, so hopefully that makes sense. Now we're going to go do the same thing on the other contract. So we're going to have a look at the weekly contract, which is 1,517. So we're going to get the weekly up. Right, so this is where the current weekly opened. So 1,517, 1,500. Pretty much here, right? And 1,517. That's close enough. And yeah, so basically then I'll get the box out. And now if the weekly closed anywhere in between here, right, and we went long on it, we would lose money, right? Because that's, you can see how the intrinsic value is actually a lot smaller, right? So if it was closer to the end of the week, we might think about possibly shorting this, and then we would make the difference between the current contract value, which is 15.17, and the current intrinsic value of the contract, right? And so if this happened, if we stayed around this price as we got closer and closer to the weekly close, what would happen is this would slowly bleed out. The contract value of the move contract would slowly bleed out as time expires. It would push towards the closing value of where the candle is away from the weekly open. And that's what the decay, the time decay is called. Like there's always that pressure of time that it will slowly push towards the intrinsic value of what the actual move is away from the daily or weekly price. And then you can do the same things with quarterlies and stuff like that. It's pretty straightforward, but I don't think we need to get into that because it's exactly the same thing over and over again. We can quickly go have a look at the quarterlies. They're a little bit bigger as well. So you can see it's almost $3,000 the move contract is worth, right? And so what you'll find a lot of the time is usually the intrinsic value of the move contract is actually a lot lower than the contract price, which is something that's quite interesting, which usually is the reason why most of the time shorting it is actually a better option. But it can depend, because it can start moving pretty quickly when you start to get breakouts, and traders start to anticipate a lot of volatility and start to anticipate that there might be a chance that there could be some profit on the table by us closing up here, right? Because if we close up here on the weekly, for every move contract that we have, we're going to make the distance from here to here, which is $1,217, right? So I mean, you can imagine the guys that were trading this when we had like these sort of days and stuff like that. Like whoever was long the move contract on this day, oh my God, absolutely destroyed it. So yeah, that's pretty much it for the move contracts, guys. Hopefully wasn't too in-depth, too technical. They can be used in like a whole heap of different strategies for hedging and stuff like that. We're not going to get into that sort of stuff now. There's a couple of good little YouTube videos online if you want to dig really deep into it. But the most important thing we're going to get across is how to calculate that intrinsic value and how to draw the parameters on your charts, so you understand, where the money is made when you're long. If you're going to the outside, and the money is made if you think it's going to close inside here, then you want to be shorting, right? And that's where the profit will be. If you think it's going to close inside the box, you want to short. If you think it's going to close outside the box, you want to be getting long. And that's pretty much it. Like, it's pretty simple, play around with it. Just play around with it, and yeah, use a small amount of money to start off with. Don't be trying to be a hero and just throwing down 1 to 10K per contract when you first get going, because it's going to take up way too much capital in your account. Because you don't remember, every one move contract is going to take up 1 BTC in capital. It doesn't cost you that, but it's just holding it there as collateral. So you can't use that collateral to take other trades. Anyone you recommend from move contract via YouTube? There is one guy that actually put out some interesting stuff. I'll find his thing and I'll post it in Discords. And he's basically talking about how to use it with hedging and stuff like that. So, you have a trade that you think is going to play out, like an ascending triangle or something like that, and you can hedge. So if the trade doesn't play out, it goes against you, and then the move contract plays out because the volatility goes up, but the trade goes against you. You still make the profit on the move contract, so it covers any loss that you made on the trade that you were taking. So it just helps to minimize your losses. So that sort of stuff is pretty cool. It's a little bit more, like an insurance, right? It's a little bit more advanced, and it takes a whole heap of different calculations and stuff like that. We're not going to get into that. Yeah, I think it might have been possible Bitcoin trading challenge. But I'll find him anyway and post him up. It can be a little bit confusing for your average traders, so we don't want to get into that sort of stuff now. And I haven't been testing the move contracts on stuff like that yet, so I don't really want to get into teaching it. Yeah, you have to have a minimum of 1 Bitcoin. Yeah, it's pretty confusing with the hedging, isn't it? So yeah, just get your head around how the move contract works first, and then you can combine it with trading strategies as well. So that's pretty much it for tonight, guys. We've gone on for 2.5 hours. Jesus, we can talk some shit.
There's a couple of questions in the Q&A if you can grab that real quick.
All right. I can't get it up for some reason.
Here we go.
The Q&A. How are you shorting FTX? Okay, so it's the same thing, right? So we come across here and see how I've got buy move BTC. You just click over here. You go sell move BTC. So that would be the same on any of the markets, right? And you can see there, right? So the next day move contract, I'll show it. The other thing as well, remember, guys, is this thing, right? You can get the basic or you can get the advanced version. I prefer the advanced version because you can really take profit in, put your stop loss in and everything at once. It tells you the gains and the losses you're going to make, right? And remember, you just put in 1 move contract or 2 move contracts, right? and it'll tell you how much it's going to cost over here. And for each one, it's going to cost 1 BT in collateral. All right, so the move contract is what defines how much the market must move to take any profit. And our goal using TA is to determine if the move is possible. Yeah, that's exactly it, right? So we're trying to work out where the move contract, what traders are pricing the move contract at, where they think that it will expire. So the traders are all trying to guess, right? So right now, everyone's guessing that there'll be a $372 move in the tomorrow's open and close. Right, so depending on what our TA is telling us, we can sort of try and work out where that is. But you can't calculate the distance like with the boxes that we use on the next day move contract until obviously the daily closes and we open. So you'd have to recalculate that. But we can do it on the current one, right? So we're expecting 350 is what everyone's guessing at the moment. And, as it starts to move up, as price starts to fluctuate and move away from the daily open, right? So we're starting to have a little bit of price action move away from the daily open now. And that's why the move contract is, it's starting to push up a little bit now. And it gets very aggressive very quickly, which is why, if you think it's just like a bullshit wick or something like that, you can quickly jump in here and you can short it if you think it's going to go back towards the daily open price, which I don't really recommend, especially when you're trying to learn. It's pretty high risk doing that because it could just continue and keep going. But sometimes you see those big wicks get put in, and you're just like, this is going to retrace the whole way. So you can sort of catch some of those and get some really good trades. Like, imagine you got the top of this or something like that, right? It's an easy $250 for every move contract that you had open. Awesome. So maybe Monday is better than Wednesday. It might not be much, but I don't care which day. Monday is my new day. Nice. Great insight. Signed up yesterday. How do I access the first recording? We'll send the recording should be getting sent out to everyone in the email. So you should get tonight's recording and the last 2 recordings tomorrow during the day. So move trade was wrong. What is the cost to you? Or can you actually lose? Yeah. So if let's just say we were shorting from here, and that's why I don't recommend shorting after a downtrend. Like we're short after a pump, and we think prices hit support level or something like that, it's going to reverse. So that's when you would want to short it back here because you think it's going to go back towards the market open, right? So basically, what happened with Bitcoin here, we'll get up our chart, right, is, we had the market open. It started to sell off quite aggressively. And then we tagged a really key support in this order block. And then we put in this bull hammer and obviously pushed, right? So while that's happening, the whole time we're pushing back towards the daily open price, and it's going to drop the value of the move contract. And you can see it's dropped, 43%. So when you get good at trading this thing, you can you sort of match it up with, if you think price is going to actually bounce here, it's going to swing the volatility back towards the daily open. That can be a really good opportunity to short, and you can make maybe a lot more money on the trade because this is only open a couple of hours, right? You can make a lot more money on this trade here than you can actually longing this on Bitcoin, right? So yeah. All right. Literally trading the volatility, 100%. Best session. Love it. Thanks a lot, Josh. Hopefully we didn't ramble on too much.
Gone for a little while. I thought this was going to be a quick one.
Yeah, no, it'll be an easy, quick one.
Yes, you can use leverage. That's pretty much what happens, Bo. So to be able to go short, you need a lot more in your account to be a capital as collateral, whereas to go long, you don't need nowhere near as much. I think they hold about 5% or something as collateral, but short, you need a lot more.
Yeah, so I think I answered the question, how you lose, right? So let's just say that we went short here, which I think would be probably not the best idea at the moment, right? So we're into a short position like this. And typically I don't really use stop losses, but if I was going to use a stop loss, I would have it as the price of one move contract away. And that's why you want to try and get in a little bit higher. But so, yeah, I mean, I haven't really worked out how to make the stop losses work in this effectively, and try and limit the downside risk. But yeah, it's definitely there. And if the price just starts like rapidly exploding out of nowhere when you're not predicting it, you can take a pretty big hit, right? So if I got in here and price went all the way back up here, I'm going to be losing $369 for every move contract I have open. So, big profits can also swing the other way and have big losses as well. So you need to be aware of that and be smart with this contract, and don't get yourself into a position where you're going to get your account liquidated or something like that, because you're betting too much money. So start out small, start out with $10 or $50 or something like that, just to get the hang of it. And then once you're a little bit more comfortable, you go up to $100, $200, or a whole move contract, or just stick to using one move contract at the start or something like that.
Cool.
Between doing the paid altcoin mastery course, this FTX course, and Troy's lives, racking up the hours, the last few days, but loving it, learning heaps. Cheers again. Nice, Troy Bridges. Legend. All right, guys, we'll probably wrap it up there. It's pretty late.
I might just quickly add one thing to the end of the video. Just
Yeah, sweet.
Rewatch this.
Handball across.
All good. Just the Discord side of this, guys, as you remember. Both running a free month on behalf of FTX and both of our private communities. So if you enjoyed this, definitely be a part of that. For the people that are just joining late, because we shared the links today saying it's not too late to join this webinar. So if you are tuning in now or rewatching this later, definitely join the Discords. It's free for a month. Pretty much daily updates from both of us and both of our Discords. Yeah, get on board. I think you'll learn a hell of a lot. Make the most of it.
Yeah, definitely get involved in the Discords, 100%. I'll just drop them in the chat box at the moment for everyone. So if you're not in the Discords, click the links in the chat boxes. Troy's at the top, mine's at the bottom. And yeah, join up and just give us a tag and post your ref link in there for FTX, and we'll add you for a free month until the end of August.
Awesome.
No worries, guys. Chat soon. Happy trading. Hope you guys all get some wins. There's a lot of good trades out there at the moment. So we'll chat soon and see you guys on Tuesday. Don't email me about recording, please. Everyone emails me. It'll be sent out tomorrow afternoon or morning sometimes. And we will be back here Thursday night at 8 p.m. for session 4. We're going to be going through some awesome stuff. Where is it? We're going to be going off trading strategies again. Complementing complete on TradingView and execute on FTX. Troy will teach you one of his backward and forward tested checklist-based trading strategies with 84% strike rate. And I'm going to teach you guys how to trade one of my most profitable setups. So make sure you tune in there. It's going to be an epic session. We'll see you guys soon. Ciao.
Cheers, guys. Thank you.